Yeah, good morning, students, and welcome you all once again in the live virtual classes organized by Board of Studies of ICAI. Students, since in the last class, due to my health issues, I was not able to complete Ind AS 115. So today, in the next 1 hour or 70 minutes, I'll cover the two concepts, repurchase agreement and service concession arrangement of Ind AS 115. And after that, CS Shilpa Agarwal ji will take Ind AS 2 on inventories. Okay. I hope that is good for you. So students, quickly, let me revise the step number 5, recognition of revenue when the performance obligations are satisfied. Quickly, I'll revise that. And then after, I'll jump to repurchase agreement, and then I'll cover service concession arrangement. My dear students, in the last class was of 1 hour only. In the last class, we have covered the recognition of revenue. Revenue needs to be recognized, which is the last step of the 5-step model when the performance obligation is satisfied. And when you will say that performance obligation is satisfied, when control will be transferred. And control can be transferred in two manners. One, control can be transferred at a point in time, or control can be transferred over a period of time. Okay, for example, if a company has sold a mobile phone, the moment the company is giving the mobile phone to the customer, the control is transferred at a point in time. Okay. So performance obligation is satisfied at a point in time, but the company is also providing 3 years of warranty service. So now this warranty service control is getting transferred over the period of time. Whenever the customer need that assistance, customer will go to the service center and customer will get the services. Okay. So here control is getting transferred over a period of time, and here control is transferred at a point in time. So now we need to recognize revenue either at a point in time or over a period of time. Now, the question is, sir, do we have any guidance about when you will say that control has been transferred over a period of time, control has been transferred at a point in time? So, guidance is provided for control is transferred over a period of time. And if that guidance does not met, then it is automatically control will be transferred after a period of time. Sorry, at a point in time. Okay. So this is what it is there. Now, my dear friends, 3 guidance were given. Condition number 1, any of the condition, if any of the condition will met, you can say that control is transferred over a period of time. First condition, the customer is simultaneously receiving and consuming the benefit of goods and services as the entity performs. For example, I am teaching you. Okay. So are you getting the benefit? Are you consuming the benefit simultaneously or not? Tell me. Or you will say that, sir, today you will teach us step number 5 and we will be able to understand step number 5 after 3 months. Is that so? Or the moment I'm teaching you daily, when I come to teach you, the moment I'm giving you new topics, are you able to understand? Are you able to consume? Are you able to get the benefit out of those topics or not? Yes, that's how we operate every time. So like Ind AS 115 we covered in 6 classes, other standard we cover in 1 class, 2 class, right? So this is how we operate. Yes or no? Yes. So the first condition is the customer is simultaneously receiving and consuming the benefit of goods and services as the entity perform. For example, newspaper agency, security guard service, gym service, electricity, water. So it means the control is transferred over a period of time. Means revenue has to be recognized over a period of time. Condition number 2, the customer control the asset and as it is created or enhanced, the benefit passed on to the customer. Now, the main condition in this second condition is the asset should be controlled by the customer. It has to be in the possession of the customer. And when the asset is created or enhanced, the benefit passed on to the customer. For example, construction work in progress, paint work, furniture work in the premises of the customer. Condition number 3, the entity performance does not create the asset with alternative use and the entity has a right to receive the consideration to the extent of the work has been performed. Okay, right? So if any of these 3 conditions will be satisfied, then you can say that control is transferred over a period of time, performance obligation is satisfied over a period of time, and revenue has to be recognized over a period of time. If any of the condition does not meet, then what will happen? Rachit, Ravinder, Sai Kiran, Parivesh, if any of the condition does not met, then what will happen? रेवेन्यू रिकॉग्नाइज ही नहीं करेंगे या करेंगे? और करेंगे तो कैसे करेंगे? If any of the condition will not met, then revenue has to be recognized at a point in time. You are absolutely right, Rachit. At a point in time. At a point in time. Sai Kiran, it should not be recognized immediately. So, when the control will be transferred, for example, Sai Kiran, assuming condition number 1, condition number 2 is not meeting. Okay. Now coming to the condition number 3. So, the entity performance does not create the asset with alternative use, but the entity does not have a right to receive the consideration to the extent the work has been performed, right? So in that case, if the entity does not have a right to receive the consideration, then you have to wait for the customer to take the work in progress goods, right? So when this entity will transfer these goods to the customer, then only revenue has to be recognized, otherwise not. But here, if the condition number 3 is meeting, what we are doing? We have not provided the goods to the customer. We have the goods are into the WIP stage, work in progress stage, and the entity, the customer has denied, I don't need BrahMos missile, right? And this entity has a right to receive the consideration to the extent the work has been performed. So they will recognize the revenue, okay, to the extent the work has been performed, right? So, Sai Kiran, when the control will be transferred means at a point in time, okay. So now, sir, over the period of time, sir, for example, newspaper vendor, every day he is giving a newspaper. How will he recognize the revenue? My dear friends, if there is a series of distinct goods and services, then you have to recognize the revenue on the straight line method basis. Straight line method basis means, for example, the per day newspaper will cost you 5 rupees, for example. So 150 rupees the monthly cost. But if you will take a monthly subscription, or let's say if you will take an annual subscription, it will cost you 1200 rupees annual. Sai Kiran, if 1200 rupees annual, how much revenue you will recognize on a monthly basis? By sale of newspaper, how much revenue you will recognize on a monthly basis? The per day, if you will buy only one newspaper, right, on a particular day, it will cost you 5 rupees. But if you will take a subscription for a year, it will cost you 1200 rupees. So how will you recognize your revenue? Tell me. Will you recognize revenue after a year, or will you recognize revenue on a daily basis, or will you recognize revenue on a monthly basis? So my dear friends, in this case, this performance obligation is satisfied over a period of time. The moment the customer is getting the newspaper, the customer is consuming and receiving the benefit. Yes or no? Yes, the customer is consuming and receiving the benefit, right? So today's news customer will not read tomorrow. Tomorrow it will be just like a scrap, raddi. Okay. So my dear friends, this is a series of distinct goods and services. So what you will do, you will recognize your revenue on a straight line method basis. For example, you can recognize your revenue on a monthly basis. So 1200 divided by 12, 100 rupee revenue has to be recognized on a monthly basis. If the vendor is billing on a fortnightly basis, you can recognize the revenue on a fortnightly basis also, right? So this is how you need to recognize. If there is a series of distinct goods and services, then revenue has to be recognized on a straight line method basis. Now, sir, how to measure the performance, completion or progress on the contract? For example, sir, the vendor or the contractor or the entity is providing a construction services. They are providing the construction services, and this construction services will take 5 years. And sir, this construction services is provided in the premises of the customer. So condition number 2 is meeting. Yes. So sir, the period is 5 year, okay, and condition number 2 is meeting. It means sir, the revenue has to be recognized over a period of time, but we know the total contract value is 1 crore rupee in the 5 year. Sir, how will we recognize the revenue in the first year? Tell me, how will you recognize the revenue in the first year? In case of a construction services, the entity is constructing a road, the entity is constructing a house in the premises of the customer. Tell me, how you will recognize the revenue? How will you measure the performance completion? Because in case of over a period of time, you will recognize the revenue to the extent of work performed. Yes or no? Yes. So now the point is how to measure the performance completion. कैसे करेंगे? कुछ दिमाग लगा के बताइए. Guys, tell me. So Manish is saying, sir, percentage completion of cost. So Manish is saying, sir, the contract is for 5 years. The entity will earn 1 crore rupees of revenue, but entity will know what is the budgeted cost. For example, 80 lakh. In the first year, they spend 20 lakh. So how much they spent? 25% of the cost. Means how much revenue they should recognize? 100. So 1 crore multiply by 25%, 25 lakh revenue and 20 lakh rupees of cost. In the first year, 5 lakh rupee of profit. You are absolutely right, Manish. So this is called as an input method. So my dear friends, how to measure the performance, completion or progress on the contract? There are two methods of measurement. Number one is called as an input method. Number two is called as an output method. Input means how much cost you have incurred out of the total budgeted cost. That is known as an internal method, input method. What is meant by output method? We are not able to ascertain the percentage of completion, right, by the cost also. So what we will do? We will contact an engineer, surveyor, right? He will come and he will assess how much work has been completed, right? And accordingly, how much work has been completed, and accordingly, he will tell you 30% work has been completed. So what you will do? You will recognize a revenue of 30% and the cost of 30%, right? This is how your P&L will be balanced and go by the revenue and cost matching principle. My dear friends, have you understood up to this level? We discussed one example from my Excel file, right? And we also discussed one example from ICAI study material. Okay, input method, output method. One thing I have told you, my dear friends, I told you, you need to exclude something. You need to exclude something. Okay. Sai Kiran is asking, sir, can we take internal method as percentage completion method used in construction contract as per ICDS? Yes, Sai Kiran. So that is typically same method. That is typically same method. But from the perspective of Ind AS 115 Sai Kiran, the nomenclature is different. It is known as an input method. Okay. What is the input method? Input method is a percentage of completion method. What is percentage? How you arrive at a percentage of completion method? Percentage of cost incurred divided by total budgeted cost. Right? Clear? So friends, an important aspect we discussed that in case of computing your percentage completion in input method, what you are required to do? You are required to what? क्या करना है? दोस्तों बताइए क्या करना है? You are required to exclude abnormal cost and you are required to exclude major cost of equipment ordered on behalf of customer and lying in uninstalled. For example, the contractor has started work in your premises. He put 5 lakh rupee of material and this material was stolen by the thieves on the day one. Tell me. So the total cost was 10 lakh rupee, 5 lakh rupee of material was stolen on the day one by thief. Can you say that 50% work has been completed? That is an abnormal cost that has to be charged to P&L immediately by the entity or the service provider. Okay. You will not say that 5 lakh divided by 10 lakh. Sir, 50% work has been completed. And when you came, you are looking at the ground only. Nothing was there. Okay. So my dear friends, abnormal cost has to be excluded and major cost of equipment ordered on behalf of the customer and lying uninstalled is also required to be excluded in terms of percentage of completion. We discussed one example of elevator as well. You remember or you don't remember? You remember or you don't remember? Yes. So one example from my side, one example from ICAI study material side. Then my dear friends, we discussed the concept of cost of contract. Why we discussed concept of cost of contract? Let me tell you. For example, the entity has decided to bid in a government contract. Okay. And the terms and condition was once the contract is awarded in the favor of the entity has to pay 1 crore rupees, right? Otherwise, this contract will not be provided to entity. As a part of the bid requirement, whomsoever is the winner of the contract, he has to pay 1 crore rupee of non-refundable deposit. Non-refundable deposit means expense, right? So non-refundable money. Now, friends, this is a cost of acquiring the contract. Now tell me, if you are an entity and you know that I will get a contract for 5-year period. Okay. And I am paying 1 crore rupees upfront as a cost. Now tell me whether this 1 crore rupee has to be expensed off immediately. क्या 1 crore rupee को immediately expense off कर देना चाहिए? Yes or no? I am asking from all the future chartered accountant whether 1 crore rupee which you spent on account of getting the contract, and you are certain if I'll pay 1 crore, I'll get the contract, right? Should I expense of this 1 crore rupee immediately, considering I will get the future economic benefit? I mean to say I will earn the revenue in the next 5 years. Rachit is saying, no, sir, it has to be over the time of the contract. But Rachit, tell me, if today I have spent 1 crore rupee, what accounting entry I will pass? I will create some asset. I will create some WIP inventory, right? WIP contract asset. Okay. WIP contract asset or contract asset account debit to bank, right? And that contract asset. So on the day one, I have not put anything in the P&L. Subsequently, what I'll do, subsequently I'll release, for example, 5-year period is there. The moment I'll recognize revenue in the every year, I will also release this WIP asset. I will credit and I will debit my expense. For example, inventory. You purchase 1000 unit of inventory. Will you charge it to the P&L immediately? No. So you purchase inventory today, you pass an entry, inventory asset account debit to bank. Next year, for example, you sold 100 units. What you will do? 100 units revenue will recognize, and 100 unit cost of sales, cost of goods sold you will recognize. You will credit inventory, debit cost of goods sold expense. Yes or no? That's how you will recognize cost of contract also. Cost of contract is a WIP contract. WIP contract asset. Contract asset. Okay. So friends, that is why this concept came. For example, you know that I got a government contract and you purchase an equipment. You know that I have to serve the government for 7 years, right? You purchase an equipment. Will you charge it to the P&L immediately? No, that equipment is like a PPE, property, plant and equipment. You will depreciate the equipment over a period of 7 years. So my dear friends, if there is a sunk cost, what is meant by sunk cost? Means, for example, you want a government contract and you have deposited a bid application fee or tender application fee of 1 lakh rupee. Doesn't matter whether you will get the contract or you will not get the contract, this 1 lakh rupee has gone. So whether you will charge this 1 lakh rupee immediately in P&L, or will you debit contract asset with 1 lakh rupee and charge to P&L when you will get the contract? What you will do? You have to charge to P&L. You are absolutely right, Manish. You have to charge to the P&L. You have to charge to the P&L. Okay. So cost of contract is equal to cost of acquiring the contract plus cost of fulfilling the contract. Now you got the contract. Now you have hired people, resources, material, labor. Of course, you keep on recognizing the expense and you keep on recognizing the revenue. So cost of fulfilling the contract, what does it mean? For example, you spend money, but you are not recognizing revenue because of the percentage of completion is not there, for example, right? So the percentage of completion will achieve in the second year. So you will recognize the revenue and you will, so till the time when you are spending money, you will debit contract asset, credit bank. Okay. So this is why we discuss the concept of cost of contract, and we have discussed one question from my side and one question from ICAI study material side. My dear friends, those who are not able to sum up this concept in the last class, I believe now you guys have understood it very well. The step number 5, revenue, recognition of revenue over a period of time at a point in time, input method, output method, cost of contract, cost of acquiring the contract, cost of fulfilling the contract. Please tell me, have you understood or you haven't understood? Please tell me. Tell me yes or no. Today I have revised this entire concept. Have you understood it? Very good. Very good. Yes. What about every Rachit, Rohan, Ravinder? In the last class, Ravinder told me to summarize. While I have summarized, but I have summarized in pain, right? So the kind of energy I was not carrying in the last class. Yes. Okay. Okay, right. Now, my dear friends, now let's go to the concept of repurchase agreement. I told you, no, there are 3-4 specific items in Ind AS 115, like bill and hold arrangement. Have we discussed bill and hold arrangement? Have we discussed bill and hold arrangement? Yes, we have discussed bill. You remember custodian service example, bill and hold arrangement, right? So then repurchase agreement, then service concession arrangement. A repurchase agreement. What is meant by repurchase? What is meant by repurchase agreement? What is meant by repurchase agreement? Repurchase मतलब फिर से purchase means I am an entity. I have sold the goods. Now I am again purchasing the goods back to me. Yes or no? Repurchase का मतलब तो यही होता है ना. Repurchase means purchase again. Repurchase means purchasing my goods back to me again. Okay, that is known as a repurchase agreement. My dear friends, this repurchase agreement are of 3 types, right? Forward agreement, call option, put option. Forward agreement, call option, put option. These repurchase agreement are of 3 types. Repurchase agreement means when an entity is, when the entity wants to purchase or obligated to purchase the goods back, then it is known as repurchase agreements. Okay, repurchase agreements. Repurchase agreements are of 3 types. Okay, are of 3 types. Number 1, forward agreement. What is meant by forward agreement? Forward agreement means when the seller has an obligation to repurchase. Means seller is obligated to repurchase. Seller does not have option to deny that I will not repurchase. Seller is obligated to repurchase. You understood it? आपका obligation है, seller का obligation है. Seller is obligated to repurchase. Okay. Okay. Seller is mandatory obligated to repurchase. Seller does not have any option. He is required to repurchase. Means the time he is transferring goods, he know that I have to purchase back to me. Okay. What is a call option? Call option means seller has a right to repurchase. Means what is the difference between obligation and right? What is the difference between the obligation and the right? Obligation और right में फर्क क्या है? बताइए quickly. Tell me quickly. Friends, I don't have much time. I have to complete this in 1 hour. Right? I don't have much time. I hope my screen is visible and my audio is also audible. Am I audible or not? Guys, am I audible or not? Yes, I am audible. Yes. Yeah, tell me what is the difference between an obligation and a right? What is the difference between an obligation and a right? The difference between obligation means mandatory, right means it is a discretion choice of the entity. So call option means option to call. Option to call, right? Option to call means the entity, the seller has a right to repurchase, means the seller has an option to repurchase. The seller has an option to repurchase. Seller has an option to repurchase. Okay. Seller has an option to repurchase. Is that clear? Is that clear? Seller has an option to repurchase. Seller has a right to, seller has an option. Either he can repurchase or he can't. Option number 3. What is option number 3? Put option. Put option means customer will put the option. Seller has an obligation to purchase only at the wish of the customer. Means if the customer wants that seller should purchase, then seller will purchase. Otherwise, no. Means it is at the wish of the customer, right? So seller has an obligation to purchase, but only at the wish of the customer. Customer has a right to sell. Who has a right to sell? Customer. It's on the customer choice. If customer wants, Customer will go to the seller and customer will say that please repurchase this goods, right? If customer will not go, the seller will not repurchase. Seller is mandatory obligated to purchase if customer wants to sell, otherwise no. Have you understood these three situations? Have you understood or not understood? I want confirmation from each and every student. Guys, quickly tell me, have you understood these three situations? Forward agreement, seller is obligated to purchase. Call option, seller has an option to purchase. Okay, seller has a right to purchase. Of course, it's at a discretion of the seller. Put option, seller is obligated to purchase only when the customer wants to sell. Otherwise, no. Otherwise, no. Otherwise, no. Okay. So, Rachit, Ravinder, Rohan, three of the member have confirmed. What about others? Can you confirm quickly? So Manish has also confirmed. Sai Kiran, what about you? Jyotsna, what about you? Other students, what about you? Can you please confirm quickly so that I'll move on to the accounting entries as well? Yes. Now, my dear friends, let's say in question the forward agreement is given. In the question it is given seller is obligated to purchase, right? Now, repurchase price is also given. If repurchase price is greater than the original selling price, for example, I am an entity, I have entered into a contract with Rohan. I told Rohan, I am selling you these goods at 100 rupee and I will buy these goods at 110 rupee. What does it mean? मैंने अपना मोबाइल फोन रोहन को दे दिया. I have given my mobile phone to Rohan and I collected 100 rupee. And after 2 years, I will get my mobile phone back and I will pay 110 rupee. What does it mean? Repurchase price is more than the sale price, original sale price. What does it mean? It means, don't you think? I have taken a loan from Rohan. And I have mortgaged my mobile phone to him. After 2 years, he will return my mobile phone and I will pay 100 rupee along with interest of 10 rupee. Otherwise, why I will repurchase at a higher price? क्यों करूंगा मैं? इसका क्या मतलब है? इसका मतलब this is not a sale with a right of return. This is a financing transaction. What is the accounting entry? Let's take an example. For example, an entity has sold a mobile phone to the customer for 20,000 with a forward agreement or call option to repurchase in future. Or call option, entity told, yes, I will repurchase in future. That is after 2 years for rupees 25,000. So repurchase price is 25,000. Original selling price is 20,000. On the day one, what will be the accounting entry, doston? My dear friends, on the day one, what will be the accounting entry? The accounting entry will be bank account debit to what? To loan oblique financial liability. Okay, to loan oblique financial liability. Okay, this will be the accounting entry. Are you clear with this accounting entry or not? Please tell me. How much? 20,000 rupee has been received. 20,000 rupee has been received. What is the accounting entry in the 2 years? During the 2 year, what is the accounting entry? The difference between 20 and 25. Interest cost is required to be charged over a period of 2 years. Interest cost account debit to loan oblique financial liability credit. What amount? 5,000. Difference between 25 and 5. This 5,000 rupee just like an interest. 5,000. At the end of 2 year, what will happen at the end of 2 year? क्या होगा 2 साल के बाद? This loan will be finished and I will repurchase, means I will pay loan or financial liability debit 25,000 rupees, 5 plus 20 and to bank. Repurchase करेंगे तो उसको पैसा वापस दे देंगे. The seller will repay the money to the customer. To bank account credit. Okay, 25,000. Friends, have you understood or you haven't understood this question? Please tell me if you have understood or you haven't understood this question. Please tell me. Yes? Anyone who has any doubt? So my dear friends, if the customer, if the entity, the seller, if the seller has an obligation to repurchase or seller has decided to repurchase, okay, in that case, if repurchase price is more than the original selling price, it will be a financing transaction, not a sale with the right of return. Now, if the repurchase price is less than the original selling price, then what will happen? For example, I went to Rohan and I told Rohan, this is the mobile phone. Please keep this mobile phone with you. Okay. And please pay me 20,000 rupees. So I have given my mobile phone to Rohan, right? Rohan has given me 20,000 rupees. Original selling price is 20,000 rupees. Now, after 2 years, Rohan will return my mobile phone and I will pay him 18,000 rupees. So I have collected 20,000, but I'll pay him 18,000. In the last example, I collected 20, but I am paying. The seller has collected 20, but seller is paying 25. In this example, seller has collected 20,000, but seller will pay only 18,000. What does it mean? It means the customer is using this mobile phone for 2 years. Customer has taken this mobile phone on a lease basis for 2 years, and customer has given 20,000 rupees as a advance, rental and deposit, right? So this 20,000 rupee has come as a advance deposit, and 18,000 rupee will be refunded back, and 2,000 rupee will be recognized as a rental income, lease income. Yes or no? Yes or no? Are you agree or you don't agree with this? इसका क्या मतलब? मैंने रोहन को 2 साल के लिए यूज करने के लिए दिया मोबाइल फोन, बदले में रोहन ने मुझे 2,000 रुपए दिए. फॉर एग्जाम्पल, an entity has sold a mobile phone to the customer for 20,000 with a forward agreement or call option to repurchase in future for rupees 15,000. On the day one, what is the accounting entry? Of course, bank account debit. कितने से? बैंक अकाउंट डेबिट कितने से? बैंक अकाउंट डेबिट बाय 20,000. 2. Credit what? What will be credit? What will be credit? Credit क्या होगा? 2. Security deposit. To security deposit. Deposit. 2. Advance rent income. To advance rental income. To advance rental. Okay. Credit. So this is security deposit is also liability. To security deposit liability, to advance rental liability. Okay. So 15,000 and 5,000. What happened over the period of 2 years? Advance rental liability debit. Advance rental liability debit. Debit. And 2. Rental income. Credit. Lease income or rental income credit. Right? 5,000 rupees. At the end of the 2 year, what will happen? Deposit liability will be debited and money will be repaid. The mobile phone has to be recovered back. Friends, have you been able to understand or you haven't understand? What if the seller does not want to repurchase after 2 years under call option? Rachit, while you are absolutely right, while it has been decided on the day one, but let's say at the last moment seller will deny, I will not repurchase, then it has to be recorded as a sale transaction because the control has been transferred. Okay, it has to be recognized as a sale transaction. Okay, clear? The moment seller will deny to purchase. Okay, clear or not clear? Let's say, Rachit, here instead of loan financial liability to bank is not there. For example, Rachit, at the end of 2 year, initially it was considered as a financing transaction. At the end of the 2 year, seller denied, I'll not repurchase. Buyer also agreed. So instead of to bank, it will be to sales, to revenue from sales. Okay, right? If asset destroy after 1 year, then so then of course he will charge money from the customer, na, because it is because the control is with the seller only. Control is with the seller only. Also, sir, in previous example also buyer uses the mobile phone. While buyer may use the mobile phone, but what happens? Generally in these kind of contract, it will be shown as a mortgage. Okay, it can be. So typically buyer may use, but you will not able to substantiate and probably you will not able to pass any accounting entry for that usage. Okay, right? So this is a substance based transaction. This is a substance based example. Okay, you are not going to the form, you are going to the substance. Now in the put option, what happened? Simple. the accounting entry in the put option is just like a forward agreement or call option. For example, it is likely that the customer will exercise the put option, right? So लग रहा है customer put option exercise करेगा, मतलब customer will tell seller to repurchase. Why customer will tell seller to repurchase? Let's say there could be scenarios. For example, the seller told the customer that I am selling you this goods for 10,000 and I will buy back these goods at 15,000 rupees. And seller and the customer knows that after 2 years, the market price of the goods will be 12,000 rupees only. Tell me, in that case, what is the beneficial situation for seller? To sell at 12,000 or to sell at 15? What is the beneficial situation for the customer? To sell in the market at 12,000 or to sell to the seller at 15,000? To sell to the seller at 15,000, of course, right? It means there are high chances the customer will come to the seller and customer will tell seller, please purchase my goods. Right. So there are situations. In the question, situation will be given. You have to gauge. Yes, this is in the benefit of the customer to resell to the seller. It means customer will exercise the put option and seller is mandatory obligated to purchase. Okay. So if it is likely that the customer will exercise the put option, then what will happen? Again, if repurchase price is greater than the original selling price, it will be a financing transaction. Same accounting entries. If repurchase price is less than the original selling price, then it will be a lease transaction. Same accounting will be followed as in forward and call option. As in forward and call option. Same accounting will be followed in case of put option as followed in forward and call option, right? Forward and call option. If it is unlikely that the customer will exercise the put option, then it is a sale with a right of return. Sale with a right of return. You know that he is not going to sell these goods back to me. The seller knows that the buyer will never come, the customer will never come, the seller will record the sale. You remember right of return we discussed. You are only recognizing your right to recover goods and the return liability. Return liability to the extent it is probable that the money has to be refunded. Okay. So friends, have you understood or not understood this right of purchase agreement? Have you understood, not understood? Please tell me. समझ आया या नहीं आया बताइए मुझे. आया या नहीं आया? आया? Yes? Okay. So now, let me quickly discuss a question from ICAI study material and then I will take you on the yes. I hope this question is visible to all of you. Is this visible, not visible? Whether this question is visible? Are you able to see this question? Question number 67. Yes. Yeah, question number 67. What is question number 67? An entity enters into a contract with a customer for the sale of a tangible asset on 1st January for rupees 10 lakh. Okay. 1st January for 10 lakh. The contract includes a put option. Put option means the option is with the customer. That gives the customer the right to sell the asset for 9 lakh on or before 31st December 2001. So this put option has given a right to the customer that this customer can sell the goods on or before 31st December 2001, market price at 9 lakh rupees. Market price for the good is expected to 7.5 lakh. The market price is expected to 7.5 lakh. Means if the customer will not sell the goods back to the seller, the market value is only 7.5 lakh, but the seller will give him 9 lakh. Tell me whether the customer will avail the put option or will not avail the put option. Of course, he will avail the put option. भाई 9 लाख रुपए मिल रहे हैं ना, तो अवेल तो करेगा ना पुट ऑप्शन. सेलर का नुकसान होगा, बायर का तो फायदा है. So buyer will avail the put option. So in the above case, how should the entity account for this transaction? In the above case where the entity has an obligation to buy back the goods up to a certain date, the entity shall evaluate if the customer has a significant economic incentive to return the goods. Since the repurchase price is higher than the market price, therefore customer has significant economic incentive to return the goods. There are no other factor which entity may affect this assessment, right? Therefore, company determines that control of goods is not transferred to the customer till 31st December, that is till the put option expires. Against payment of 10 lakh, the customer only has a right to use the asset and put it back to the entity for 9 lakh rupee. Therefore, this will be accounted for as a lease transaction. Repurchase price is lower than the original selling price, so it will be considered as a lease transaction, in which difference between original selling price 10 lakh and repurchase price 9 lakh shall be recognized as lease income over the period of the lease. Okay. At the end of repurchase term, the customer does not exercise such right, for example, then the control of the goods will be passed to the customer at that time and revenue shall be recognized for sale of the goods for repurchase price of 9 lakh. Is that clear or not clear? Please tell me. Is that clear? Not clear? Yes? Clear? Very good. Now, my dear friends, now let's go to the next part, service concession arrangement. What is the service concession arrangement? What is meant by service concession arrangement? My dear friends, have you seen the toll plaza? Have you seen the highways, toll roads? Have you paid toll ever in your life? Have you seen the bridges? Have you seen the culverts? Have you seen the airports? So, what do you think? All these infrastructure are only constructed by the government or constructed by the private parties also? These infrastructure is constructed by the government or constructed by the private parties also? Friends, the government has a limited funds, right? Government has limited funds. So government always invite tenders from the private parties to build infra, to operate infra, to build infra and return to the government after certain number of years. Okay. So friends, this is known as a public-private partnership. For example, you know, government has given lot of contract to Adani. Have you seen Mumbai Airport? Who is managing Mumbai Airport? Who is managing Mumbai Airport? Adani is managing Mumbai Airport. Navi Mumbai Airport. Who has developed Navi Mumbai Airport? Adani. But whether it belongs to Adani? No, it belongs to government. Government has given a contract to Adani to build, to construct the airport, to manage the airport for let's say 30 years, and whatever revenue comes from the managing and operating, right? So that will go to Adani. After 30 years, Adani will give it back to the government. Okay. So whether the control, whether this infrastructure is in the control of Adani or in the control of the government, infrastructure is in the control of Adani, not in the control of the government, not in the control of Adani. That is why Adani will not capitalize property, plant and equipment. While Adani has spent thousands of crores in building the airport, but this airport is not belongs to Adani, right? Adani has constructed, Adani has built, Adani will manage, but Adani will not recognize property, plant and equipment because the control is not belongs to Adani. This road, airport, runway, building, it belongs to government. Infra belongs to government, right? So my dear friends, in service concession arrangement, the government or government entity enters into a contract with a private party to develop, maintain, upgrade the public infrastructure which is providing service to the public, right? This government or government entity is known as a grantor and this private party is any private entity. When I say government entity, for example, NHAI, National Highways Authority of India, NHAI is a government entity. It is not a government entity. NHAI is awarding the contract to the private parties to develop highways, build a toll plaza, and collect the toll from the user of the service. Okay. So this is known as a public-private partnership, and this Ind AS 115 talks about the accounting in case of public-private partnership, right? This private party is known as operator, and government entity is known as a grantor. Okay. These are the examples. So friends, we are going to discuss what will be the accounting in this case. Okay. Service concession arrangement we discussed. It's an arrangement between a government and the private party to build, operate, maintain the infrastructure such as roads, bridges, tunnel, airport, energy distribution network, prisons, hospitals, etc., etc. Okay. So now the question is, how to do the accounting of this public-private partnership. How to do the accounting of this public-private partnership? Okay. How to do the accounting of public-private partnership arrangement, service concession arrangement. Okay. So friends, service concession arrangements. In this case, in the service concession arrangement, there is a government party, government entity, which is known as grantor. Okay. This government entity awards the contract to the private party, okay. This private party is known as operator, okay. So this private party constructs oblique build, operate and manage the public infrastructure, okay, public infrastructure. This arrangement is known as service concession arrangement. This arrangement is known as service concession arrangement. Okay. This arrangement is known as service concession arrangement. Right? Clear? Now the question arises. For example, the question arises. For example, ABC Limited got a contract to construct 100 kilometers of road, right? 100 kilometers of road from the government, and it incurred 200 crores of construction cost, right? They will manage the road for next 20 years. They will manage the road for next 20 years and will collect the toll from the users of the users, okay, from the users of the public service. Means that is the travelers, okay, that is the travelers. Okay. Advise how to do the accounting in the books of the operator, that is ABC Limited. कैसे अकाउंटिंग करें इन द बुक्स ऑफ द ऑपरेटर, दैट इज एबीसी लिमिटेड? बताइए फ्रेंड्स. First of all, there are two phases in service concession arrangement. Always there are two phases. One, construction phase. Number two, कौन कौन सा फेज होता है? कंस्ट्रक्शन फेज एंड द O&M, operation and maintenance phase, right? Means regular operation and maintenance phase. Anyone who is not able to understand so far? Anyone who is not able to understand so far? Guys, tell me. आप सबको समझ आ रहा है या नहीं आ रहा है? Analysis. There are two phases. Of this arrangement, right? Arrangement for ABC. That is, they are constructing and they are also managing. Okay. So construction phase and operation phase and operation maintenance phase. Now, my dear friends, this company has incurred 200 crore rupees. Okay. This company has incurred 200 crore rupees. So, two bank becomes 200 crores. To bank credit 200 crores. What should I debit here? What should I debit here? I cannot debit property, plant and equipment. I cannot debit property, plant and equipment. And of course receivable from government. So see, just hold on the receivable from government, right? So I'll debit cost of construction. Cost of construction will, I will debit cost of construction, debit. Okay. Cost of construction, I will debit 200 crores. Okay. And to bank will be credited 200 crores. My dear friends, see, this entity has two options. See, this entity has incurred 200 crores right now, and this entity will also incur in the maintenance of the toll plaza. You have seen people are sitting at toll, they are collecting toll, right? So their regular maintenance work going on the highway. So this entity will incur the construction cost. This entity will incur the operation and maintenance cost also. In return, what this entity will get, my dear friends, the government will provide the consideration in two ways. The government will provide the consideration in two ways. Government दो तरीके से consideration provide करेगी. Government कैसे consideration provide करेगी? Government will provide the consideration in two ways. Number one, government will tell this ABC, you have a right to collect toll. You have a right to collect toll. आपके पास toll collect करने का right है. For example, if you will collect a toll of 1 crore rupees in a day, it all belongs to you. Or even though if you collect 1000 rupees of toll, that is also belongs to you. Means the government has given a right to collect toll. Government has given a right to collect toll for 20 years. Right to collect toll for 20 years. Okay. So when the government has given a right, when the government has given a right to collect the toll, it will become an intangible asset. क्या होता है intangible asset? You are giving some right, you are getting some right, you are getting a license to receive some future economic benefit. Okay. But the second option, the government will not give you right to collect toll. The government will give you contractual right to receive cash. Means government will say, I will give you 50 lakh rupee on a daily basis. 50 lakh rupee on a daily basis, for example. 5 lakh rupee on a daily basis, for example. So government has guaranteed the cash. Government told, listen, if you will collect the toll of 20 lakh rupee, you will return 15 lakh rupee to me and you will keep 5 lakh rupee. But if you will collect a toll of less than 5 lakh rupee, I will compensate you. Okay. So friends, there are two options. There are two options to it. What are the two options? Option number one, the government is giving a right to collect toll. If the government is giving a right to collect toll without guaranteeing any amount, it is known as an intangible asset model. If the government is giving a contractual right to receive cash, a guaranteed amount of cash, it is known as a financial asset. It is known as a financial asset, right? So my dear friends, let me elaborate this question now, right? As a consideration, so your accounting will depend on the consideration. As a consideration, the government has proposed two scenarios. The government has proposed two scenarios. Number one, scenario number one, the government will give the right to collect toll for 20 years. For 20 years. Okay. Number two, the government will give the contractual right to receive cash. For example, a guaranteed amount of cash of rupees 5 lakh on daily basis. Okay, on daily basis, right? On daily basis. Okay, right? So friends, these are the two phases of this arrangement for ABC, that is they are constructing and they are also managing. Further, the depends, the accounting depends on the accounting depends on the consideration model, on the consideration model. If the operator or the entity, if the entity is getting the right to receive, receive, it will be an intangible asset model, intangible asset model. If the entity will receive a guaranteed amount, it will be a financial asset model, okay. Now how the accounting will be done, let me tell you. This cost of construction debit 200 will go to P&L, right? Being construction cost incurred, okay, incurred initially. Now what is the next entry? So you have recognized a cost. Don't you think in this case, in the service concession arrangement, what is your performance obligation? In the service concession arrangement, you have two performance obligation. Performance obligation number 1, providing construction services. Performance obligation 2, providing operation and management services. So you will recognize the revenue to the extent. So in this case, for example, it is a intangible asset model. For example, it is situation number 1. For example, situation number 1. Okay. So in this case, it will be intangible asset model. What will be the accounting entry? You will debit intangible asset account debit, and credit to revenue from construction service, to revenue from construction service, okay, to revenue from construction service. So my dear friend, revenue, this has to be recognized on the fair value, being revenue recognized on fair value of the construction. Means this is the cost. If this entity will provide the construction service to the government and collect the money from the government, will this entity collect only 200 crores? अगर ये एंटिटी कंस्ट्रक्शन सर्विस गवर्नमेंट को देती, ये एंटिटी कहती ठीक है मैं कंस्ट्रक्शन आपके बिहाफ पे करती हूं, तो क्या 200 करोड़ मांगती? बताइए, यस और नो? ऑफ कोर्स नो. वो तो 200 करोड़ तो कॉस्ट है ना स्वामीनाथन. 200 करोड़ इज द कॉस्ट ना. यस. So it will be not be 200 crores. For example, it has to be 2, of course, plus margin. You are absolutely right. For example, it is 250 crores. Okay, right? So this will be recognized as a revenue from the construction service. And how it will come? Revenue 250 crores and cost of construction is 200 crores, right? Cost of construction is 200 crores. Okay, so this is your profit on the construction phase. Notional profit, right? Now my dear friends, now what will happen in the operation and maintenance phase of 20 years? What will happen? क्या करेंगे अब एक्सपेंस भी तो होगा ऑपरेशन एंड मेंटेनेंस फेज का. यस, ऑपरेशन एंड मेंटेनेंस फेज का एक्सपेंस भी होगा ना. श्योर मैम. Okay, so there will be operation and maintenance phase expense also, right? So you will do the operation and maintenance expenses account debit and maintenance expense debit to bank on a regular basis, to bank, right? Credit XXX, okay. You are absolutely right. Ravinder is saying, sir, when amount is fixed, it is a financial asset model. When amount is not fixed, it is a intangible asset model. Ravinder, you are absolutely right. Hold on for the balance part. So being expenses incurred on regular basis, whenever this maintenance happens, then you will collect the toll also. Then what you will do? You will amortize your intangible asset, Ravinder. You will amortize your intangible asset, right? So amortization expense account debit करेंगे नहीं करेंगे 20 years में? Amortization expense account debit, amortization expense account debit to intangible asset कितने साल में? टू इंटेंजिबल एसेट कितने साल में? 20 years में टू इंटेंजिबल एसेट. लास्ट में तो 20 ईयर के बाद गवर्नमेंट को वापस करना है ना. कितना होगा? 250 डिवाइड बाय 20 years, right? So every year 12.5 is the amortization, being intangible asset amortized, amortized. Okay, then my dear friends, now you will collect the toll. Okay, what you will do? Bank account debit. Okay, bank account debit to what? Bank account debit to what? See, few portion you have, when you did the fair value, you have did the estimated number. ठीक है? So now what you will do? To bank account debit to revenue from toll, credit, revenue from toll, credit. Every year, see, whatever intangible asset you have recognized, every year you are debiting this 12.5 also, na, every year, right? So whatever money you will receive, you will bank account debit to revenue from toll, being the toll collected. I hope this is clear to everyone. Please tell me if this is clear or not clear. Is this clear or not clear? Now, second portion. What is my second portion? The government will guarantee the money. The government will guarantee the money. Okay. The government will guarantee the money. Construction phase. Let me put the same example. Construction phase. Cost of construction debit to bank. Instead of intangible asset, it will be your financial asset. Okay, simple. Then what will be the accounting in the operation and maintenance phase? What will be the accounting in the operation and maintenance phase? कौन सी अकाउंटिंग होगी ऑपरेशन और मेंटेनेंस फेज में? होगी या नहीं होगी अकाउंटिंग? In the operation and maintenance phase, what will be the accounting? Operation and maintenance expense account debit to bank. Whether this entry will happen? Whether this entry will happen? Instead of this entry, which entry will happen? Your financial asset account debit to debit to interest income. On this financial asset, interest income is going to be recognized. Interest income, financial asset account debit to interest income, right? To interest income. And then bank account debit to financial asset. Bank account debit to financial asset. This is how this financial asset will become zero. Okay. So on the financial asset, your interest income is going to be recognized, being interest income recognized. Interest income recognized. My dear friends, let me show you one of the real life practical case study from ICAI study material. Okay. So let's go to the ICAI study material and let's discuss this case study. I hope this slides are visible. Illustration number 75, and this illustration covers your financial asset model as well as intangible asset model. A Limited is in the business of infra and has two divisions under the same, toll road and wind power. The brief detail of this business and underlying project details are as follows. Bhilwara Jabalpur toll project. The company has commenced the construction of the project in the current year and has incurred total expenses aggregating to 50 crore as on 31st December 2001. What is the cost of construction? They have said that 50 crore as of date. Under ICAI, company has recorded such expense in the intangible asset, so it doesn't matter what they have done in ICAI. Forget about this. Total expenses estimated to be incurred on the project is 100 crores. Okay. So on this project, the total expense is expected to be incurred as 100 crores. Fair value of the construction services is 110 crores. So cost of construction 100 crore and fair value of the construction service is given in the question 110 crore. Total cash flow guaranteed by the government under the concession agreement is 200 crores. Total cash flow guaranteed कौन सा मॉडल? फाइनेंशियल एसेट मॉडल और इंटेंजिबल एसेट मॉडल? फाइनेंशियल एसेट मॉडल, यस गारंटीड. फाइनेंस रेवेन्यू भी दे दिया. ओवर द पीरियड ऑफ ऑपरेशन फेज इज 15 करोड़. Other income relates to the services provided during the operation phase, right? This other income relates to the services provided during the operation phase. Let's do this question. So the question is asking how will you do the classification, intangible asset model or financial asset model, and how will you do the accounting? Can we do this question? Yes. अब तो हमें पता है, कर सकते हैं इस क्वेश्चन को. Yes or no? Yes. भिलवाड़ा जबलपुर project, my dear friends. This Bhilwara Jabalpur project. If I talk about this Bhilwara Jabalpur project, right? So now you guys know this. So let me, instead of writing, let me copy it from somewhere. Yes. So this Bhilwara Jabalpur project, there is a guaranteed cash flow from government. Nature of consider will result in financial asset, right? So now what will be the accounting entry? What will be the accounting entry during the construction phase? What will be the accounting entry during the construction period? कौन सी accounting entry होगी? Simple. Cost of construction account debit to bank. कितने से? What is the amount? The amount is 100 crores. This is a financial asset model. What is the next accounting entry? Financial asset account debit to revenue from construction. At what amount? At what amount? 110 crore. 110 crore, right? This is given in the question. 110 crore. Okay. Now, so this is the construction phase accounting. Now we need to recognize finance revenue over the operation and maintenance phase, right? So we need to recognize the finance revenue. So over the operation and maintenance phase. So that is actually incurred, but the total cost is 100 crores. So what you can do, cost of construction to bank to vendor. To bank to vendor, you can also do to bank to vendor. Okay. So we are assuming this 50 crore has already been expensed off, or you can also do cost of construction to bank to vendor 50-50. Okay, Yogendra. So the total cost incurred is 100 crores. As of now, incurred 50, right? So on the operation and maintenance phase, what you will do? You will recognize finance revenue. What is the accounting entry? क्या हो गई फटाफट बताइए. Finance revenue. I have to wind up in the next 5 minutes. Finance revenue, financial asset account debit to interest income. Financial asset account debit to financial income. What is the value? They have written 15 crore rupee. 15 crore rupee is the value, right? This is given in the question, 15 crore rupee. Then 75 crore rupees are other income from the operation phase, right? Other income from the operation phase. So what we will do? We will again pass an accounting entry. Financial asset account debit, right? To revenue from operation, services, right? They have given in the question 75 crore. क्वेश्चन में लिखा है 75 करोड़, तो क्वेश्चन में ही दिया है, राइट? उसके बाद क्या होगा? टू रेवेन्यू फ्रॉम ऑपरेशन सर्विसेज. फिर बैंक अकाउंट डेबिट. Now you will receive the money when you collect the toll. So government has guaranteed you bank account debit to financial asset. Government has guaranteed you 200 crores. Financial asset. Okay, credit. What is the value? 110 financial asset plus 15 financial asset plus 75, 200 crore, right? Yes, Manish. If there is an operation expense, you are absolutely right, Manish. If there is an operational nature of expense, it has to be debited in P&L, right? We have already given the accounting entry. Now the next part. I believe you guys have understood it very well. Kolhapur-Nagpur Expressway. The company has also entered into another concession agreement with Government of Maharashtra in the current year. The construction cost for the said project will be 110 crore. The construction cost is 110 crore. Fair value is 200 crore. fair value is given and the cost is given. The said concession agreement is toll based project and company needs to collect the toll from the user of the expressway. Under IGAP, forget about IGAP. So the government is not guaranteeing you, government is giving you right to collect toll. क्या होगा, intangible asset या financial asset? Financial asset, sorry, intangible asset. Okay, so in this case what will happen in this case? In this case, intangible asset. So what accounting entry you will pass in Kolhapur Nagpur project? Very simple. In the Kolhapur Nagpur project, simple, let me put the accounting entry because you guys know the accounting entry. In the Kolhapur Nagpur project, in this case there is a right to collect the consideration, not the fixed amount. So nature of consideration is intangible asset model, right? So accounting during construction period, cost of construction to bank 110 and intangible asset to revenue from construction service 200 crore. I hope this is very clear to all of you. Yes or no? Clear है या नहीं है? समझ आया या नहीं आया? Then during operation and maintenance phase, what you will do during operation and maintenance phase? You will recognize operation and maintenance expenses to bank. Then you need to amortize intangible asset. Then you need to collect toll also. You need to collect toll, right? You need to collect toll. And when you collect toll, you will do bank account debit to revenue. Okay. Then when you amortization expenses to intangible asset, this is over the period 200 crores. And then operation and maintenance expenses to bank, right? This is the accounting. I hope with my example and with ICAI study material example, you guys are absolutely clear on this. Right? Okay. So friends, this is what we have discussed. And my dear friends, for your understanding, what I'll do, I will also capture the list of the concepts in the Excel file, what we have covered in the last 6 classes. Today we have revised step number 5, and today we have also covered repurchase agreement and service concession arrangement. Thank you so much. Now I am giving you a break for 5 to 10 minutes. Shilpa ma'am will join and she will cover Ind AS 2 inventories. Thank you so much. I hope you enjoyed the session. I hope you have understood the concept of Ind AS 115. If you have any question, any query, you can reach out to ICAI Board of Studies, and of course they will reach out to me and I will answer those queries either one-to-one or to the Board of Studies of ICAI. Thank you so much. I will share this Excel file today itself. Thank you so much. Bye-bye. Take care.
Thank you, sir. And students, just have a 10 minutes break, and so that after that we'll join. Okay? Okay.
स्टार्ट करें फिर।
Good morning, students. The countdown to the now. Good morning, students. Welcome to our new topic for today, that is India's to inventories. And hope as of now you have already completed your India's 115 topic, and this is the small topic and also the easiest, one of the easiest standard among all the 39 standards which has been notified till date, and out of which 35 is applicable to you for your financial reporting paper. This is the easiest standard. But why it is easiest? We have to understand, because similar standard was there in accounting standard, that is in Indian GAAP also, and more or less most of the provisions which was there in AS2 continues in India's 2, so which was there in accounting standard 2, that is AS2, is now there in India's 2 as well. Similarly, we have IAS2. As you all know, India's are converse standards of IFRS. So we have IAS2 there, and where we have IndAS2. This as it is an asset-based standard, we have, it will what the coverage of the standard will be recognition, measurement, presentation, and disclosure. So because it is an asset-based standard, we are talking about recognition and measurement. There's a specific standard in inventories which deals with recognition and measurement. So any other standard which deals with recognition and measurement of particular aspect, that has been excluded from the scope of Ind AS 2. So let us start with Ind AS 2. Before starting, let us first understand, just a minute. Okay, let us first understand the importance of this chapter. See, students, we have bifurcated the entire syllabus of financial reporting in 8 sections. Section 3, which is on asset and liability based standard, carries weightage of 15 to 25%. One of the standard in this section is Ind AS 2. So, and what is the probability of asking questions from this standard? The probability is that if you see, after every 2 attempt, you will find a question on Ind AS 2. That is for descriptive part. However, when it comes to MCQs, you may find question on alternate basis in every alternate examination, a topic or a question on Ind AS 2. So from both perspective, this chapter is important. Though it is an easy standard, small standard, but its importance is there because inventories directly get a place in the financial statement, that is balance sheet. Now let me first understand, who also know that where is inventory placed in the financial statement. Manish, Rachit, Ravinder, Saminathan, Rohan, Josna, Aliti, and Sai Kiran. Where do we place inventories in the financial statements? Okay, current assets. Very good, Aliti. So, students, okay, below current assets, yes, it is current asset. One of the current asset. Current asset is your main category. Under that, we have first item, which is your inventories. Okay. Good morning, ma'am. Okay, good morning, Saminathan. And students, see, I have earlier also, when I have taken classes, I always requested everybody to be very inquisitive. Whenever I am explaining, in case you have any queries, you feel, good morning, Ravinder, you feel that you are not able to understand or why this has been done, but it has not been done in the other way. Why? When? How? Whatever question it comes to your mind, even the silliest question, just ask me. Feel free to ask me. I am there to resolve, not only as your faculty for today, as BOS faculty as well. So I'm there to resolve all your queries. So please be open to me and very frank for any small question which comes to your mind. When I am explaining at that time, immediately you can ask me. So, okay. So we were talking about the relevance of this standard. So this standard is important from your examination perspective. Whenever question comes from this standard, it is almost of 5 to 6 marks in descriptive portion and 2 to 4 marks in your MCQs. Definitely not in every examination you will find a question on Ind AS 2, but alternate or after 2 examination for sure Ind AS 2 questions appear. That's what the trend analysis was there of past examination. So I'll also be telling you what kind of question has appeared in past examination when I'll be proceeding further. Okay. Okay. Sorry. Okay, now the learning outcome. After reading this standard, after understanding this standard, you will be able to understand what is the objective and scope of formulating this standard. Why this standard? Why there is a separate standard on inventories? What is the purpose? What is the objective they are going to meet by formulating the standard, or what is the objective you are going to achieve after studying this standard? As you all know, asset-based standards deal with recognition, measurement, presentation, and disclosure. So, in this standard, definitely we are going to first deal with the recognition part. What is inventory? Then measurement part, how it is valued, what is how to determine the inventory cost, how to measure on initial date and subsequent measurement as well, and then how to present it and how to disclose this. These are the four aspects in all most of the asset based standards, and it will be applicable for your Ind-AS 2 as well. Okay. So objective, as we told, because every standard, asset-based standard has four dimensions. So first is to prescribe the accounting treatment. As we are talking about financial reporting papers, so accounting treatment is the foremost, and every asset-based standard will deal with the accounting treatment. So it will deal with the accounting treatment for inventories. For doing the accounting of inventories, we have to first understand what is the cost that is going to be recognized. What is the cost of inventory that is to be recognized, or to be what measurement of inventory, what that is to be accounted for in your books. Okay, so that will be, that we can say as initial measurement. Then initial measurement is basically it's an asset, so we need a cost. Okay, we will not talk in the terms of expenditure, we'll talk in the terms of cost. Okay, for determining the accounting treatment, first is to determine the cost initially, and inventories, until and unless it is not sold, we have to measure it on every reporting date. So subsequent measurement is also important, that every reporting date we should be aware of what is the value for which we have to account for we account for inventories in the reporting statements, okay, financial statements. Next is situations. Sometimes, as we have all the assets, every asset goes with depreciation. For tangible assets, or we say property, plant, and equipment, depreciation is there. For intangible assets, we have amortization. Similarly, for your current assets, which are basically not more than 12 months. So in general, we say there is no wear and tear, but definitely it may become obsolete. It may become stale. It may be demand supply is not matching, or we can say demand decreases, because of that value decreases. Okay, any new technology comes because of new specifications, new improved version of the inventories are now there. So in because of that, value of that existing material or existing inventory goes down. So every asset has, okay, like mobile phones, definitely this is one of the best example. Mobile phones, every time when the new technology comes, the old phone still is available in the market, but value decreases. So that the value which decreases, we do not give it in the form, we do not mention that in the form of depreciation, because it is a current asset. And for current assets, we don't use the term depreciation. Then how to write how to recognize whatever the wear and tear is there, or whatever absolute any decline in the value, how to recognize that in the financial statement? That we do in the form of reduction in the inventory, in the form of to net realizable value. When your net realizable value may be more than cost, may be less than cost. When it wherever it is more than cost, it is completely okay. We are recognizing on the basis of cost. Okay. However, yeah, Saminathan, but when value decreases, NRV is your net realizable value is less. At that time, we have to measure our financials, measure our inventories at NRV. So difference between cost and NRV goes to P&L. It is not in the form of depreciation, but it is in the form of decline in the value of that current asset, or we can say in the decline in the value of inventory. Okay, so the third objective which we have is to identify the situation when to write. Just a minute. When to write down inventories to net realizable value, that also the standard will prescribe the situations. Okay. Also, this standard will, because we are talking about cost and subsequently when to recognize it or when to measure it, what to measure. So we also, the standard also deals with measurement techniques and cost determination methods. In different situation, for different kind of inventories, we have different measurement techniques or cost determination methods are there. Different methods are there. Okay. Okay. अजीब मूव नहीं हो रही, मूव नहीं हो रही स्लाइड.
Awesome.
Okay. Now talking about scope for this standard. Students, as I told you earlier, we have for many kind of inventories which may appear it is an inventory, but we have a separate standard, separate Indian accounting standard, Ind AS on that particular aspect. So because of that, this has been excluded from your Ind AS 2 purview. Okay. Financial instruments, why it, when it can be considered as inventory, I want to understand from all of you, why, when will the financial instrument will considered as inventory? And for which kind of entity it will be considered as inventory? Any guess, any idea? For what kind of inventory? And okay, when it is at the time of sale? No, no. When it will be considered as inventory? For at the time of sale, it is not inventory. At the time of sale, it may be your investment also. Like NBFC, yes. Why NBFC? Because NBFCs are investment entities. They deal with, they are financing entities. You know? For financing entities, inventories are these financial instruments. But because we have separate standard on financial instrument, therefore inventories have specifically excluded from its scope financial instrument, because we have standard Ind AS 32 and 109 which deals with accounting, recognition, measurement, presentation of financial instrument as well as disclosure also. So next is biological asset. What are biological assets? Biological assets are any living animals or plants which have life, that they are biological. Okay, we study in biology in 11th, 12th, or we can say in from still since 9th class. So biological assets, any living animals or plants related to agricultural activity or agriculture produce at the point of harvest. Why we are talking about at the point of harvest? Because on point of harvest we have a separate standard that will measure these agriculture produce. After harvest it becomes inventory, and for that inventory we have measurement. Okay, because at the point of harvest, as per Ind AS 41, we have a separate standard on agriculture, that is Ind AS 41. You'll be studying later. Okay, so till the point of harvest, it is an agriculture produced, not before, not after. Only at the point of harvest, Ind AS 41 will be applicable. Okay. Yeah, exactly, Saminathan. After harvest, respective standard will apply like Ind AS 2 and Ind AS 16. Very well said. Okay, so till the point of harvest, Ind AS 41 will be to at the point of harvest. After it is harvested, what will be the cost of that particular agriculture produce? The produce which will has been recognized at the point of harvest. That is fair value less cost to sell. That will be the initial recognition of that inventory after harvest. However, at the point of harvest, if there is any agriculture produce, that will not be considered as inventory. Okay. Moving to next part. Okay. Once again, explain. Cow is an asset as per Ind AS 41. It is also an asset as per your biological assets. It is there. Definitely very good. But right now, let's come back to here Ind AS 2. We are talking about, not we are talking about asset. We are talking about the produce which we are getting from these biological assets. Okay. However, plant sometimes it is an asset and it becomes inventory also when it is harvested. Sometimes some plants become an asset, long-term asset, and its products are becomes our inventory. For example, fruit-bearing plants, whatever fruit-bearing plants are there. So that tree, food-bearing trees, in fact, Food bearing trees are your asset, long run biological asset, but the produce or the fruits which you are getting from that becomes your inventory in case you deal with your buying and selling or purchase, okay, and sale of that particular commodity. So we'll be talking about what is inventory, definition of inventory. Right now we are talking about scope. These inventories, whatever we have talked about the scope, they are not forming part of Ind AS 2, out has been excluded from the Ind AS 2 for measurement till the point of harvest. After harvest, these becomes inventory, and when they become inventory, Ind AS 2 provides the measurement. Okay? Okay. So producers of agriculture and forest products, agriculture produce after harvest minerals and to the extent measured in NRV are as well as established industry. These inventories fall under Ind AS 2. Okay, but not its measurement. For measurement, we have separate standards, so we deal with that. However, for these standards, after harvest, it is recognized as inventory, so it will fall under Ind AS 2. Similarly, commodity brokers, traders buy or sell commodities to for others or on their account, aiming to profit from price fluctuations. Measure inventory at fair value less cost to sell. Why? Because they have holded that asset for profit, and profit is not because of change, is not because of that you are purchasing or selling, you are holding it, and price fluctuation in market happens on its own, and based on that price fluctuation you are earning profit. So that type of that kind of assets are measured at fair value less cost to sell. So they fall under Ind AS 2, but measurement is as per your financial instrument. Okay. However, whenever changes in values are recognized for these two items, we recognize it through, we route it through profit and loss. Okay. Any query till scope, we can move to now definition. From this till objective and scope, we do not have any question in general which appears in your examination. From definition onwards, provisions of standard will start. So any query regarding your scope or objective you have, you just let me know. Otherwise, we'll proceed to definition. Okay, clear. Good. And I want everybody to participate. Aliti, Sai Kiran, Josna, Manish, Rachit, Rohan, I want everybody to participate. Okay? Okay, Aleti is asking, we have heard that there is change in pattern of MCQ questions. How does this affect? I will talk about this, Aleti. Just remind me. I'll just give me a brief. Yes, for MCQs, number of MCQs will be increasing, though the total number of marks for objective type assessment will be 30, but number of MCQs are going to increase for November 2026 examination. Because of this, what will happen? That every MCQ will not carry 2 marks. Some MCQs will be of 2 marks and some MCQs will be of 1 mark. 16 MCQs of 1 marks and 7 MCQs of 2 marks. So that is 14 plus 16 is equal to your 30 marks. So overall percentage of weightage of objective type assessment is 30 only, but your internal number of questions has increased. All will be application based. So students, what I request everybody to go for good practice for some questions which you have because see MCQ may you don't need to give any reasoning. There is no negative marking. So only you have to do calculations on your calculator or your orally. Okay. So be but thorough with the conceptual understanding of the provisions of the standards, and try to, in case you're not able to, try to do it from hit and trial or elimination method. Okay, you have to be fast in your MCQs so that your descriptive time allotted to your descriptive portion does not get affected. Okay, this will be challenging for you for initial examination. But one more thing I'll request, we'll be giving the mock test papers, both the series, based on this MCQ pattern only. So go through the mock test paper series, attempt them under examination condition so that you get well versed of this new development, and you'll be able to attempt fairly in the main examination. Okay, hope Palati I have replied to you. Okay. What is at the time of sale? Manish is asking, what is at the time of sale? At the time of sale of what? You are talking about what agriculture produce? See, agriculture produce, even for agriculture produce at the time of sale, Ind AS 41 prescribes you the treatment. So Ind AS 41 will be dealing with that, not Ind AS 2. It will be considered as inventory for presentation purpose, but not for measurement purpose. Okay, as it is very clearly mentioned, but not this measurement rules. Okay. Okay, Manish, I have replied to you. Now next, Ravinder. Okay, LBFC, yes. Okay, yeah. Moving to next part, that is our definition. This is from here our standard starts, mean provisions of standard start. So what are inventories? As everybody understood that inventories are assets, and in our financial statement, it is presented as current asset under current asset. Okay. So when do we consider inventory as an asset? When it meets three criteria, either of the three criteria. It is not that it is all the criteria. When it meets either of the three criteria, it will be considered as inventory. And those three criteria are: inventories are assets when it is held for sale in the ordinary course of business. So this is very important term, though we tend to ignore it. Ordinary course of business. Ordinary course means your course of business should be that you are buying, selling, or you are manufacturing and then selling the in this particular kind of asset, and for that purpose you are keeping it for you are holding it for sale. That is inventories. If it is not an ordinary course of business, it is for rare purposes, for trading purposes, that is not your ordinary course of business, then it becomes your investment, like financial instrument we were talking about. For finance entities, it is an inventory, but for those entities who are dealing with some other manufacturing or other trading, but they are also having some other inventories also, which they sell after a time to get only for when the price appreciates to earn profit, then that will not fall under the category of inventory. So it is very important, held for sale, but at the same time it is important the ordinary course of business. Okay. In process of production for such sale, sometimes inventories, exactly what you buy, you do not sell it in the same form. You do some use just incur some cost for conversion and making it another product, and that another product is your goods for sale. So that is your finished goods. So in process of production also we are having anything during the process. And by the end of, when do we measure inventory? We measure inventory at the reporting period, huh? On the reporting date. Okay. So it is not necessary that on reporting date everything has been converted into finished goods. In case you're dealing with manufacturing of something, everything, it is not necessary that it is ready for sale. So that will be work in progress also. So it also work in progress of any particular current assets that is held for sale in ordinary course of business, that will also fall under the category of definition of inventories. Okay. So in process of production for such sale. For example, it may happen one thing which is a raw material to you, maybe a finished good to somebody else. For example, just an example, you deal with packing materials or you deal with gift hampers. Okay. So you are buying many things and you prepare a basket of gift hampers and ready for sale. For that, you buy small things also, consumables like ribbons, sellotapes, and everything. Sellotape, not exactly, but ribbons or decoration materials. So for them, from whom you're buying those things, they are the final product for them. But for you, it becomes a one of the raw material for that particular product. So you are having all these things which are complete in this itself. Ribbon is complete in itself, but for you it will be work in progress until and unless you are preparing that you are making ready particular hamper. Okay. Or your hamper is incomplete by the time it has half of the hamper is filled and half is left, so that is your work in progress. Okay. Similarly, we can talk about any manufacturing item also. The car dealer, car manufacturer, they have bought small parts and they have to assemble car, and that assembling of car is yet to be done. So by that time, everything will be considered as work in progress or spare items. Okay, based on its usage and what for what purpose we are holding it for sale. We are holding it for sale as spare parts, or we are holding it for manufacturing, assembling the and making it one car. Okay. Like construction of SS also, yes, construction of SS also, it will be there. in case construction of assets, maybe beta you have to see, because 115 deals with real estate. So for even work in progress measurement is dealt with there. Na? So we have material, raw material, that is considered here. When it is ready for sale, at that time it will be an inventory. It will fall under this standard. But by the time when we sell it, what will be the profit, that will fall under India's 115. Okay. Material or supplies. We talk about held for sale, that is finished goods. We talk about in process of production, that becomes work in progress. Now we are talking about raw material also. Something which is, we bought it, but we haven't started production. We haven't started manufacturing or something. So, or we haven't started providing services. In that case, those materials or supplies will be considered as raw material. Okay. So, in this standard, we'll be dealing with the accounting treatment of work in progress, raw material, and finished goods, all the three kind of inventories. Okay, moving to next part. This standard, India is 2 deals with only three definitions. One is inventories. And before taking this another two definition, let us go through the example. This is the illustration given in your study material only. Whether the packing material and publicity material are covered by the term materials and supplies awaiting use in production process. See, students, will be later dealing with the cost measurement part also. Before that, first of all, we have to understand the recognition aspect. For recognition aspect, we have to understand what is considered under held for sale, what is considered under raw material, what is considered under work in progress. So this is what we say is recognition portion of your standard. Okay, so in this recognition aspect, as I talked to you earlier, when you are preparing for hampers, you have many things, decorative materials, ribbons also, your frills also, you may be having some confettis also, some thermocol balls also, besides cellophanes also, which will cover your basket also. So these packing material, they are basically packing materials. These packing materials, whether they will also be considered as inventory or not. So we split our packing material into two parts: primary packing material, and which is, we can say, secondary material. Secondary material, which is at the time of sale you need to, so a carry bag, you need to give it at the time of sale, that won't be considered as your part of inventory. However, in case you are giving something without which you cannot sell that particular asset. Okay, for what kind of example can we have for this? Again, milk packets, that poly bags in which milk is which comes to your home, that packing material is important for milk to make you reach to your place. Okay, so without that packing material, it will not be possible for a person to sell products, sell milk. Why? Because you may have that open wala can also, that milkman who comes and give to you milk, but that is different. Those packed milk which comes to your place. Okay, very good. Biscuit packets, oil packets, gas also. Gas, exactly, if you're talking about cylinder, so that is returnable. That cylinder is returnable. So we will not consider as a, we can say it will not form part of the cost of the material inventory. It will be an inventory for the manufacturer, but it will not be, this cost will not be considered as in the under whatever we say determination of cost when we are doing for inventory, that will not be considered. There is a separate deposit for that containers which carries that gas, that cylinders. Okay, okay. While the, okay, cold drinks also. For cold drink, beta, if you are earlier time when we were having that glass bottles, Gold Spots or Limca, we were having glass bottles which were on returnable basis. They were inventories, but their cost was not included, forming part of the cost of the inventory, the main item which is sold within that particular bottle. But nowadays, since there's plastic bottles, so yes, plastic bottles becomes the primary packing material, because without that you cannot have that cold drink also to your place. So it becomes your primary packing material and it forms part of the inventory. Okay, so the primary packing material, one which is essential to bring an item of inventory to a saleable condition. Okay, they form part of inventory. Okay, other packing material required for transporting and forwarding the material will normally be in the nature of secondary packing material, and those secondary packing material do not form part of the material inventory for determination of cost. Okay. Okay, such glass bottle, Manish is asking, glass bottle for manufacturer, if it is not inventory, it is inventory for manufacturer. I am saying it is an inventory for the manufacturer, but its cost will not be included in the cost of the product which you are getting within, which is filled in that particular glass bottle. Okay. It will be an inventory. Definitely, it will be an inventory because without that bottle, they cannot uh, sell that material to you. No? So that is a packing material. That is inventory for them, but a separate inventory. We cannot say there is a one single inventory. There is a separate inventory of glass bottles, separate inventory of the product which they are going to sell to you. Okay, like jute bags in case of rice or wheat. If we don't return this, in general, the small packings we don't return. Big packet, it may that dealer may buy it again, but small packets we don't return. So definitely they are inventories, and they are inventories along with that particular set, which you are going to consume it or you are going to buy it. So yes, that is also inventory. Inventory for the manufacturer for sure, because they have to keep that also in store and have to use it with the main product as in when they are manufacturing and selling it. Okay. Okay, moving to the next definition. As I told you, this standard carries only three definitions. First, we have already talked about inventories. Inventories held for sale. We see inventories held for sale, inventories which are in process of production for such sale, for same sale, what or the sale which you are going to have in ordinary course. For that process, if you are having anything process of production, and materials of supplies, or we can say in short term raw materials. Okay. Now, second definition which we are going to study is net realizable value. This is very important, very important for you from this standards perspective, because one of the main concept which is to be applied for your measurement part. Okay. So net realizable value is anything which you are going to realize, anything which you are going to get in case when you are going to sell that asset. Okay. So inventory, when you are going to sell that inventory, whatever price you are going to fetch from that inventory, the selling price after deducting certain expenses, whatever comes is your net realizable value. So now what is to be deducted from the estimated selling price? So first thing which we have to understand is the term estimated. It is not necessary that your that selling price is fixed. It may be that you are estimating it, or that is tentative price which you believe that you may get when you sell this particular inventory. So estimated selling price in the ordinary course of business. Again, this ordinary course of business will continue for the entire standard. Okay. So in the ordinary course of business, less estimated cost of completion and cost necessary to make the sale. So in both any directly attributable cost which is necessary to make that particular inventory in a saleable position or for sale becomes and when you are determining, or when you are determining the net realizable value, these estimated cost will be deducted from the estimated selling price. Okay. Cost necessary to make sale, this cost is also estimated cost. Okay, I'm not very well with the pen, so my writing may be very, not very legible. Just let me know in case you are not able to understand what I have written. Okay, so estimated cost of completion, not conversion. Estimated cost of completion. Any cost you have incurred till date, it may be, it also forms part of the cost, but any estimation, any cost which has not been incurred, but you are feeling that cost may be incurred to make it at a saleable position for sale purpose, that estimated cost will be deducted while determining the net realizable value. It is an entity specific value. What do we mean by entity specific value? Entity specific value means for every inventory, entity determine their own net realizable value, determine their own estimated cost of completion based on their manufacturing process, whatever they are using it, and whatever cost they are incurring to make the sale. So it is very entity specific. For every entity, it may differ also. My estimated cost of completion may be something else, and for entity B, the estimated cost of completion may be different. Even stage of completion may be different, because of that cost of completion may be different. So it is very entity specific thing. For every entity, they have to identify their own net realizable value, not to depend on the net realizable value of any other product of any other entity. Okay. However, for fair value, the third definition which is given in the standard, fair value is the price that would be received to sell an asset in an orderly transaction. Orderly transaction, it means where everything is an arm's length, everything is fair, in place, without any disturbance, in smooth transaction is going on in an orderly transaction with the being market participants at the measurement date at arm's length, without any biasness, without any influence, at arm's length transaction is an arm's length transaction, which we say for fair value we use this term arm's length transaction. It means with proper, without any force, okay, in orderly transaction, without any conditions, the whatever is actual in the market, that price that we receive, that will be fair value. Okay. Now fair value is not controlled by the entity, it is controlled by the market based measurement. It is market factors may influence the value. So fair value is different from net realizable value for this standard. For this standard, we need net realizable value and not fair value. Though definition of fair value is given in the standard, this is only to make the difference, to help you to understand that more or less you may find very similarity in net realizable value and market based fair value, but they are not same. They are different, and we are not dealing with fair value for this particular standard. We are dealing with net realizable value. For fair value, we have already talked of fair value less cost to sell will be used for agricultural produce or for your the commodity there. For measurement, fair value measurement is to be done, and there we are saying ki measurement part does not fall under Ind AS 2. Okay. Okay, giving an example, how to determine net realizable value. See, suppose already we have given this example in this slide also, which is in your study material as well. But I'll take same example so that you don't get confused. Suppose an entity is having 10,000 units. Huh? For that, they have estimated the market value, the market selling price which they can fetch from market is rupees 10 each, rupees 10 each for each unit, 10 out of those 10,000 units. Okay. So it has a firm orders to sell at 11 also. What with incremental selling cost of 0.5 per unit. So when we are calculating this NRV, so what will be calculating 10 rupees as estimated selling price in ordinary course of business, and in that will be reducing our cost of completion, which is, yeah, say 0.5. Okay. So it becomes 9.5. Sorry. Yeah, sorry. It is not 10. Just a minute. It is 11, which is mentioned here. It is a firm order to sell at 11 rupees. So estimated selling price is 11 rupees. So 11 rupees less any incremental selling cost of 0.5, your NRV becomes 10.5. However, fair value is the price which a market will give you when you are going to sell that particular inventory. However, if you have a firm order, what is firm order? Anybody? What is firm order? Students, anybody? What is firm order? This we'll be talking in this standard further also in coming slides also. Confirm order, very good. Any order, okay, confirm order, I think, yes, very good, Ravinder. Basically, firm order means any any contract which you have already entered into, and they have ordered you some quantity with some value also, with transaction value also. So that order is because you have entered into a contract, that is a firm order, or we can say confirm order. Okay, agreed price and quantity. Yes. Okay. NRV not necessarily will be same as fair value. It may be same as fair value also, but not always. So for inventories may not equal fair value less cost to sell. There will be a difference between when we determine fair value, we take fair value as the base, and based on that fair value where we reduce the estimated cost, it may happen that you have a different uh, value, and when we take your firm order or any other net entity specific value after deducting estimated cost, you get a value which is different. So here what we meant to say, if we say 11 rupees, for NRV, huh? 11 rupees minus 0.5 selling cost, we get 10.5 as NRV. However, fair value less cost to sell, sorry, fair value less cost to sell, fair value is 10, and then we reduce 0.5, we get 9.5. So this 9.5 and 10.5 are different. So that's what the statement means. NRV for inventories may not equal fair value less cost to sell. Okay. Moving to next part. Okay. Now we had discussed all the three definitions. We are now moving from recognition to measurement. Second aspect of this standard, measurement. This is the biggest part of this particular standard. Presentation, all we know current assets may have to, under current asset inventories will be shown. So that presentation, that much. Disclosure will be covering in one slide. So the entire standard which is going to now revolve around measurement concepts, okay, measurement provisions. So first basic concept is all the inventories are measured at lower of cost and nearer net realizable value. As I discussed earlier, this is the important term which we have studied in the previous slide, and this is going to be used in future also, not the fair value. So cost and net realizable value. Net realizable value ki calculation we have already seen how to determine net realizable value. So we will not be talking about now how to compute NRV. So then what is to be, but we are talking about measurement. So what we'll discuss is first cost. How to determine cost in case of inventories. So when we say cost of inventories, cost is further splitted into three parts. Cost of purchase, exact amount for which you are purchasing it. But at the time of purchase, it is not that you have to only pay the money to purchase it. Besides that cost, you have to incur other cost expenses also to bring it to its location or present condition or to for its sale purpose. So we say cost of conversion. Cost of conversion most of the time is used, this term is used when we are talking about manufacturing products. So we say cost of conversion, raw material converted into finished goods. So cost of conversion is involved in such situations. Cost of purchase is not directly cost of purchase, it includes other part or other items also. Relate direct expenses, we can say directly attributable cost, okay, and other cost to bring inventory to present location and condition, it will discuss that also, what includes other costs. It includes your cost of, besides that it may be some allocated cost also, though we can say it is not, it doesn't appear to be directly attributable, but it is attributable, directly attributable to certain percentage. So that forms part of your other cost, okay. So first of all, we'll be dealing with cost of purchase. This aspect, students, will be applicable for all the asset based standard where we are talking about how to determine the cost. Either it is property, plant and equipment, either it is your intangible asset, either it is your investment property. This cost is not going to change. Mota mota, broadly, this will be same only. Okay, so what is this? Cost of purchase, purchase price, plus any import duties or any taxes which is not refundable or not recoverable. In case, what do we mean by not recoverable? Students, what do we mean by not recoverable here? Taxes not recoverable, not taken. Yes, input tax credit, ITC. Very good. Anything which you pay, but after that it will be returned back to you. So that is recoverable. So which will return back to you. You're not incurring anything because it will be reimbursed. You will be netted. Hai na? I paid 10,000 as tax and I received 10,000 back. It has been refunded to me at some later point of time. So what is the actual payout from my pocket? Zero. Because whatever I paid as 10,000 as tax, I got back as a benefit from some other sale or some other any transaction. So that is recoverable. So that recoverable which you are getting, it becomes zero in net, and therefore it will not be forming part of the cost of your asset. Okay, I'm talking about asset. Here we are dealing with inventory, but I'm talking about asset because this particular slide will be applicable for your PPE also, for your intangible also. Okay. What about customs duty drawback refund? See, agar in case it is refund, custom duty drawback refund, definitely it will also not form part of cost of purchase. anything which is there, it will not form part of the refund. However, custom duty refund is that you have to seek if what percentage it is refunded. Many times it is not in the form of money, but in the form of kind. So even in that situation, you have to see ki what will be. If it is in the form of kind also, then it is returnable. So it will not form part of your cost. Okay. ये क्या आ गया जी क्वेरी वाली जगह पे अच्छा got it okay 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 still they are not forming part of cost Manish role in eligible input under GST I'm not able to find exactly maybe something अच्छा some typo है ना okay okay so purchase price plus import duties which are not recoverable, transport and handling charges. What are included in transport and handling charges? Freight, factory go down, whatever we are storing, the handling charges, you know, octroys and all these are something expenses which we incur to bring that whatever material we purchase to bring that to our factory. Okay. So loading, unloading, yes. Loading and unloading, these are transport and handling costs. Other costs directly attributable to acquisition, which is not mentioned. This is a broad final. We can cover everything which is directly attributable to with respect to purchase of the asset. So any cost incurred to purchase any asset in the form of raw material or in the form of finished goods which you are using it for your trading purpose. So that will be added to your cost of that will be capitalized. Or in short, we can, however, what will be deducted is your trade discount, rebates and similar items. This we are studying from class 11th. Trade discount do not form part of the cost price of the purchase. Hai na? We always say cash discount is deducted at later point of time. However, trade discount is deducted at the initial stage only. And sometimes it is not reflected also. We do not reflect 10,000 1 lakh minus 10,000 trade discount, we don't show it as 90 in this manner. What we do is we directly come with this value. Okay. So trade discount are always deducted when it comes to cost of purchase because that is a discount which you are going to get show short. So that do not form a part of purchase ever. Your purchase is always considered as 90,000, not 1 lakh minus 10,000. Okay. Though for testing you, we mention it as we purchased it for 1 lakh, invoice value was 1 lakh, and we got 10,000 discount. For me, cost of purchase will always be 90,000, not the invoice value minus trade discount. We will not show it in this manner. We'll show it directly like this. Okay. This we have studied in our 11th class also. If you this you can able to recall. Okay. So this is first element of our cost of purchase to cost of inventory. Sorry. For determining the cost of inventory, there are three elements: cost of purchase, cost of conversion, and other cost. We have completed cost of purchase. Moving to cost of conversion. Okay, before that, first take one illustration, illustration two, and then though I'm already having a solution also here, so let me move to another slide where we can deal with this. Okay, okay. Here we can solve it easily. Cash discount given after payment will be treated as income, yes, and that will not form part of your inventory. That is not related to any expense which help you to bring the asset to saleable condition. Okay, cash discount is something which is given to recover the payment, not to recover the asset or to sell the asset. So it does not form part. It is not deducted from the cost of the inventory. It is separately shown as your income in your profit and loss account. Okay. Okay. Question is ABC Limited buys goods from an overseas supplier. It has recently taken delivery of 1,000 units. Please can zoom slide. Yeah, sure. Is it visible now? Okay. Good. Okay. Just a minute now. Something is. ABC Limited buys goods from an overseas supplier. It has recently taken delivery of 1,000 units of component X. The quoted price of component X was 1,200 per unit. 1,200 per unit for 1,000 units. But ABC has negotiated a trade discount of 5% due to the size of the order. So first of all, we'll value the per unit component value. 1200 divided by 5, sorry, into 95%. We arrive at somewhere 1140. Is it? So students, am I right? Yeah, less percent. See, what I told you earlier also, it is not that we'll be showing you the value of trade discount. We, after trade discount, what value comes, we simply start our accounting or we start our calculation, we show our calculation from that particular point of time. So 1140, 1200 minus 5% trade discount is the value 1140 per unit, which is multiplied with your 1000. So actually I wrote it here. I can write here. So I'll do it one thing. Where is the eraser? Ajit, eraser कहाँ है? Okay, we'll write it here. 11,40,000. Okay. This is the purchase price. After that, the supplier offers an early settlement discount of 2% for the payment within 30 days. So again, as I had already mentioned you, this is your cash discount or settlement discount which is for recovering the payment, sale proceeds, not for selling the product. So that won't form part of your. However, at the same time, import duties, basic custom duties of 60 per unit must be paid. So 60 again with 1000 multiplied by 60, we get 60,000. This will form part of the, because it is mentioned through customs. It is nothing is mentioned whether it is goods are released to custom. ABC must, nothing is mentioned about whether it is going to be recoverable or not recoverable. We assume here as not recoverable, and accordingly we have added to for in the cost of the asset. Okay. ABC must pay a delivery cost of 5,000 to have the component taken to its warehouse. So it is directly related to buying or bringing it to its present condition. So this will also form part of the cost. And now it is 12 lakh 5,000. Hope it is clear. Manish, discount, what you're talking about discount, please 2% of discount is finance. Yes, 2% of discount is finance discount, and that will not, no, it's not finance cost. It is not finance cost. Finance cost is interest part. Interest part is different. Interest part is different when it is you are paying, you are allowing a credit period of more than 12 months or a long credit period. You are selling goods for 12 lakh, but you are asking them to pay it after 1 year or 2 years hence. So that 12 lakh includes finance cost. That is different thing. It is discount. It is discount. Finance cost is an expense which is shown in your P&L. However, cash discount is your income, which will show in your P&L as a credit, as an income. Okay, so they are two different things. Hope Manish, I'm okay. I'm clear with you. Okay. So 12 lakh 5,000 becomes the cost of purchase. The first element of the cost of inventory is cost of purchase, and this is your 12 lakh 5,000 cost of purchase. Okay. Coming back to the PPT again. This I have already intention to take a settlement. Discount is irrelevant. So here we are not the supplier offers this. We'll do something an early settlement discount of 2% for payment within 30 days. So within 30 days, this is for payment and it's an intention it offers. It will not form part of your cost of purchase. It is not a directly related cost which is attributable to bring the asset to its present condition for its sale. Okay. Moving to the next part, second element of the cost of inventory, which is cost of conversion. Cost of conversion includes direct costs, which you can very clearly identify, like your labor cost, your freights, something. These are your direct cost. At the time of purchase, you are including it. Then your fixed overhead, production overhead, and variable overheads. So fixed overheads plus variable overheads become your production overheads where it is not directly related to it. Production overhead is basically, I told you, other cost is also there. Like production overhead is that you are working in a factory. Factory में manufacturing हो रही है. Factory manufacturing is taking place in factory, but there are some administrative staff also who are looking after this, or they are contributing to the manufacturing directly or indirectly. So for that indirect contribution, for both fixed and variable, some allocation is done, some percentage of this is dedicated to the manufacturing of inventory that will form part of your production overhead. So first of all, right now we are not talking about this production overhead. We'll be talking about the direct cost, that is freight, any directly related cost which we incur to bring the assets to its present condition or present location, and then fixed overheads and variable overheads. This is the term which you have very well studied in your cost accounting paper at intermediate level. Fixed overheads, which is not directly related to your output. This is not directly related to output, but it will be incurred either you are manufacturing or not manufacturing, like rent, like salary. They even if some production is not taking place because of whatever reason it is, but you have to pay the salary to the staff, you have to pay the rent for keeping the raw material, for to holding the raw material, holding the finished goods. So that rent whatever we are paying, that is your fixed overhead. It is irrespective of how much you are producing. Okay, however, variable overheads are directly related to the units manufactured or produced, or units bought which is ready for sale. Okay, because your inventory includes both trading goods also and manufactured goods also. So variable overheads, it varies based on the units you have manufactured or you are ready to sell, and it is directly connected to it. Fixed overheads, irrespective of the whatever units you are doing, that is will be there. Okay, like aircraft manufacturing, we need to procure a lot of inventory. For that, interest cost will be added if loan availed. Yes, it will be there, but it depends. Interest cost is used basically for this purpose. You will say it is a borrowing cost. Huh? Saminathan, it will be considered as borrowing cost. For borrowing cost, standard specifically mentioned when you can identify that it is how it is directly related, then only you will be able to capitalize that finance cost in all conditions. And in general, finance cost is not capitalized for inventories. In general, it is not capitalized, but when you are able to directly identify, you are able to clearly identify that it is directly related to this particular inventory, manufacturing of this inventory, then only you will be able to add or capitalize in the cost of inventory for this, that particular portion. But it is in general rare. In general, we do not do that. Okay, practically we don't do that. Okay, rent is electricity expenses are also fixed. Yes, we can say even if manufacturing is not done, people are sitting, staff, electricity may be used. Definitely. Okay, so now we have to deal with what the provisions of what how to deal with fixed overhead. Variable overhead, since it is directly connected to the number of units manufactured, so it is simple. But for fixed overheads, we have further provisions to study. Okay. Okay, normal capacity. First, one term which we have to use is understand is normal capacity. Average production over a number of periods net of plant maintenance loss is your normal capacity. Normal capacity means whatever in all good scenarios, what will be the normal capacity, what will be the normal quantity which will be manufacturing. Maybe that you produce more than that, maybe you produce less than that, but it is a standard production units which you have identified, which an entity identified for as a capacity for that particular manufacturing outlet. Okay. So for fixed production, when your actual production is fixed or standard, which has sorry, your normal capacity is fixed and it is standardized. So your production has to be checked with that normal capacity, whether it is over, whether it is under, or whether it is matching with the normal capacity. Okay. In case AP means actual production, your NC means normal capacity. Okay. So just for shortcut so that we can cover the entire provision in one slide. So if your actual production is equal to normal capacity, for example, you are having your normal capacity of 10,000 units, and a factory can produce 10,000 units in a month as is the normal capacity, but they have produced only, say they have produced 10,000 units only. So actual production is 10,000, normal capacity is 10,000. So entire fixed overhead is allocated to the production based on the normal capacity. normal capacity until it is actual production, the actual production is equal to fixed overhead, or when actual production is less than fixed overhead. Okay, when actual production is less than, at that time we allocate fixed overhead based on the normal capacity. Okay, however, when actual production is more than normal capacity, for example, your normal capacity is 10,000 but you have produced 12,000 units. So in this case, what is happening? Actual production is 12,000 units, which is far better than your normal capacity. In that case, we cannot use the allocation of fixed overheads per unit to your actual production. For example, let me just give through an example. Suppose your fixed overhead is 1 lakh rupees. Okay. Your normal capacity is 10,000. In that case, per unit cost comes to rupees 10 per unit. Is it okay? 10 per unit? Yes. Now, 10 per unit will be allocated in case your actual production is also 10,000 unit. So, pura 1 lakh, it will be utilized. However, when your actual production is, say, 9,000, what you will allocate 9,000 into 10, these 90,000 will be capitalized as cost of inventory to the inventory value. Okay. But our actual fixed overhead is 1 lakh. So now question arises, what to do the difference of this 1 lakh and 90,000, that is 10,000. ये कहाँ जाएगा? Any guess? कहाँ जाएगा ये? क्योंकि हमने तो पर यूनिट के हिसाब से किया. We have calculated fixed overhead per unit and then we have applied or we have allocated that fixed overhead per unit to the actual production, which was less than the normal capacity. So we utilized 90 lakhs, but actual fixed overhead which we incurred was 1 lakh. So 10,000 का जो shortfall है, that is also to be recognized. भी हमने खर्चा तो कर दिया ना, तो हमें तो recognize करना ही है. तो हम उसे कॉस्ट ऑफ इन्वेंट्री में नहीं हम लेकर गए, तो हम उसे पीएनएल में डायरेक्टली ले जाएंगे. ठीक है. सो टोटल फिक्स ओवरहेड लेस एलोकेटेड फिक्स है इन 1 लाख माइनस 90,000, दैट इज 10,000, which will be expensed, recognized in P&L as an expenditure. Okay. Okay, but not capitalized but expense in P&L. Okay. Okay. In case you have an actual production of say 12,000 units, you cannot allocate 10 पर यूनिट जो हमने निकाली है वैल्यू, हम इसको नहीं कर सकते ना. क्यों? क्योंकि हमारी फिक्स ओवरहेड कितनी निकल आएगी. अगर हम इस 10 रुपीज पर यूनिट के हिसाब से एलोकेट करेंगे, देन आर 12,000 यूनिट्स इनटू 10 इज इक्वल टू 1,20,000. बट इन एक्चुअल वी हैव इनकर्ड ओनली 1 लाख रुपीज. सो 20,000 के हम क्या करें, ओवर स्टेटमेंट कर देंगे, ओवर वैल्यूएशन हो जाएगी, विच इज नॉट करेक्ट. वी कैन नॉट एलोकेट फिक्स ओवरहेड more than what is it incurred. अगर 1 lakh incur है तो we have to allocate 1 lakh only. Either we split it into what is capitalized and what is expense immediately, or we actually fully allocated to. So here what we can do, we can only incur 1 lakh only. So in that case, what will happen? Per unit cost of fixed overhead will reduce. Per unit fixed overhead cost will reduce. तो हमारी कितनी हो जाएगी? 1 lakh divided by 12,000, because we cannot allocate more than 1 lakh. So 1 lakh ही होना है. So per unit cost will reduce. What will come? I want the answer from everybody. 1 lakh divided by 12,000, what will be the answer? 8.33. Okay, good, Aditi. So here per unit fixed overhead in case when actual production is more will be 8.3. तो आपकी per unit cost reduce हो जाएगी. बाकी दो cases में per unit cost same रहेगी. In other two cases your per unit cost will same, but your allocation will be based on your normal capacity. So normal capacity सिर्फ इन दोनों वाले blocks में ही काम आएगी और किसी में नहीं आएगी. Okay. Hope it is clear. Moving to next slide. So what we allocate 1 lakh or 90,000, this is called absorption. The term which we are saying must be absorbed. So absorption is a term used when we are allocating fixed overheads to the actual production and where actual production is less or equal to your normal capacity. So we say fixed overheads has been absorbed to this extent. Okay. Okay. Moving to next part. Allocating fixed overheads to normal capacity. This already we have given an example. Here example is for 5 lakh units. This I've already covered. I hope I'll be sharing this PPT with you all, and you will get this example also. It is given in your study material also, but I have already taken a separate example, so I'm not discussing this. We'll be moving forward because it's already 9:25. Okay. Never overstate inventory above cost. This is basically for what purpose? As we have already discussed, in case your actual production is more than the normal capacity, you cannot allocate more overhead. You can allocate the actual fixed overhead only to as a capitalization to inventory. Okay. Same question was given in this form also, this normal capacity prediction. Illustration 3. Let me move to there because there we can properly deal with this. Just a minute. Okay, moving to illustration 3. You would in such a situation you won't get the example here, answer here. Okay. Business plans for production overheads of 10 lakh per annum. The normal level of production is 1 lakh units per annum. Due to supply difficulties, the business was only able to make 7 lakh 50,000 units in the current year. Other cost per unit was 126. So I'm not talking about other cost. I want what will be the fixed production overhead allocated to this 7 lakh 75,000 units. For 75,000 units, what would be the fixed overhead? 7.5 lakhs. Very good. And what about 2.5 lakh? Actual fixed overhead was 10 lakh. So what about 2 lakh 50,000, which we have not capitalized? P&L. Very good. Very good, Manisha. So I believe everybody have understood and we can move forward to the next part, which is your okay. Let's see this particular illustration also. Okay. ABC Limited manufactures control units for air conditioning system. Each control unit requires the following. One component X at a cost of 1205 each. One component Y at a cost of 800 each. Sundry raw materials at a cost of 150 each. The company incurs the following monthly expenses: factory rent, energy cost, selling and administrative cost. Okay, I should. Chalo. No other option. We'll just squeeze it a bit so that we can see the entire question. Okay. Sorry, it is less visible to you, but we have to see the entire question once, then we'll increase it. Each unit takes 2 hours to assemble. Hmm. ठीक है इतना भी चल जाएगा ना हाँ Each unit takes 2 hours to assemble. Production workers are paid 300 per hour. Production overheads are absorbed into units of, so we are having, this is control unit. Each control unit requires following thing. This value. Okay. So we are talking about the main material, which is, these are what? Raw materials, which are used for manufacture, sorry, raw material. Okay. So this will form part of your cost. 1205. Another component X, component Y 800. Sundry raw material of rupees 150 also. So your material cost will come to 2155. Is it okay? Yes. Okay. Now after that we have to allocate our labor overheads. So company incurs following monthly expenses. This is not the expense based on your unit. This is monthly expenses. Factory rent 16,500. Energy cost of 7,500. So total it comes to 1623, 24,000. And 24,000 is for your expenses for total hours, 300 hours. So it is for your no. Selling and administrative cost is also there, but we are not taking selling and administrative cost because they are not the cost which is used to bring the inventory to its location or for sale. So this is not forming part of your inventory cost. I'm not considering this. Factory rent and energy cost sum up, it comes to 24,000. However, it is a monthly expense, and monthly expense is for how many hours? It is again normal level of production per month is 1,000 hours. So it is 24,000 is divided by, sorry, or we can say divided by 1,000 hours. It comes to 24 rupees per hour. And how many hours are given for this particular production? Each unit takes 2 hours to assemble. And production workers are paid 300 per hour. Sorry. Okay. So we'll say 24 into 2 hours. 40 is allocated, and this is a separate thing. Production workers are paid 300 per hour, means it is a variable overhead. Till now, what we are talking about, this is what? Fixed overhead. Okay. What is this? This is variable overhead. Clear? So, variable overhead of 300 will be incurred per hour, and we are saying, sorry, we are saying 2 hours. So, 300 into 2 is it becomes 600. So, what will be the cost of inventory here? 21155 plus 600 plus 48, it comes to total 2803. Yes. Hope it is clear. In this question, we are talking about a first element, which is our cost of purchase. Second element, cost of conversion, which includes your fixed overheads and variable overheads both. Fixed overheads, it is monthly expense, and in month we have 1000 hours, and in total we are giving here 2 hours per unit. So it depends on whatever number of units you have been. We are calculating cost for each unit, each control unit. We are calculating inventory value for each unit, which arrives at 2,803. Okay. Coming back to our PPT. Now, again, as we discussed earlier, the now main portion which we have to discuss in the standard is measurement. So till now we have studied cost of purchase, cost of conversion. The third element which forms part of the inventory is your other cost. What is included in other cost and what is excluded in your other cost? Inclusion is only to the extent incurred in bringing inventories to their present location and condition. This I am talking again and again. Any cost incurred to bring the inventory to its present location and condition. Present location means from where you are going to sell it, the selling point, and condition means in the form that it is saleable. Raw material is not sellable. Huh? You have to convert into finished goods, then only you'll be able to sell it. You are buying, say, you have a ration shop. You buy in bulk, you buy in sacks, boras, में कहते हैं ना, you buy wheat. But when you are selling that, you are in just we grind it. चक्की में हम पीसते हैं and then we pack it. Huh? And after picking, so in what is the present condition? Present condition is atta, not gehu. But we bring that gehu to our workplace or to chakki, that is to bring it to your present location. And condition means present condition means in the form in which you are going to sell it as a final product. Okay, that is your flour. And for that flour, what you have to do, you have to involve cost, electricity cost, your machine depreciation cost also. Besides that, your whatever labor services you are incurring to just grind that wheat and making it wheat flour. Okay. Here, what was mentioned, this somebody was talking about borrowing cost, qualifying borrowing cost as per India's 23, wherever applicable. It is very clearly you have to identify that yes, this borrowing cost relates to manufacturing of this inventory. Then only you'll be able to capitalize it. In general parlance, we will find rare circumstances where we are able to identify it, because when we borrow things for many things, and it is very difficult to identify for a particular inventory. Okay. Financing element on deferred settlement terms recognized as interest expense over time. So interest expense over time is included, but that too of very to the extent where it is clearly identified. Okay. However, exclusion is abnormal wastage of material which can be controlled, which can would have been avoided. If that happens, then that will not form part of your other cost. It will not be capitalized. Storage cost, unless necessary before further production. In case that storage cost is used for production purpose or for production of raw material, and then it will be used for conversion, then it will be included. Otherwise, if it is a storage cost for finished goods, it will not form part of the cost of inventory. Administrative overheads unrelated to bringing inventory to its present location and condition. So administrative overheads, which I told to you, for other costs, we have certain allocation portion also. So administrative overheads, which are not directly related but can be allocated, can be identified to the manufacturing of units, inventory, that can be considered as part of other cost. Okay. always excluded is selling cost. Here, when we say selling cost, it includes selling cost and distribution cost, because distribution is associated with selling of goods, making it reachable to the seller. So it is included as selling cost, though it is only mentioned as selling cost, but it includes distribution cost. This is an explanation given by the institute in its one of the ITFGs, and also in the education material which the institute has separately released. Their selling cost and distribution cost have same nature of expenditure, and therefore both are excluded when we are determining the cost of inventory. Okay. Okay. Moving to illustration 5. Again, I'll come back to here. In this way, you won't be able to see the. I hope it is now visible. Okay. Students, just read the question, please. Why borrowing cost and interest costs are included? Manish, borrowing cost and interest costs are included when they are used for manufacturing, and that would have, without incurring those expenses, you would not be able to manufacture the production, the asset or inventory. At that time, it is directly related to in manufacturing of the inventory, and that's why it will be included. That's why again and again I'm mentioning it has to be clearly identified that it is associated with this manufacturing of this in unit. Okay, example. Okay, Manish, see, sometimes happen that we buy equipment. For that equipment, we have taken a loan to buy an equipment, and that equipment is an integral part of the main machine. Without that, the main machine would not be able to function. Okay, so that integral, that one of the equipment for which you have taken a loan, that equipment is used with the main machine for manufacturing. In that situation, any borrowing cost incurred for that equipment will form part of the cost of the inventory. Okay. However, if you find that equipment can be used for any other machine also, or it can be substituted also, in that case, that the borrowing cost which is incurred to buy that equipment will not form part of the inventory, because it is not directly related. It will be, that equipment will be used for many other processes also, or sometimes in other way we can say that main machine can be used without that equipment also. Let me just have one more example. Just a minute. Huh? For example, you have a packing material, primary packing material, cellophane. For that cellophane, to pack that cellophane, sometimes we use the blower. Okay, blower is an equipment big for big manufacturing units, for big factories. Blower is an equipment that is required for sealing of that particular box. Okay. Like you see हल्दीराम में आप देखोगे हल्दीराम not directly attributable then under Ind AS 16. Yes, under Ind AS 16 it will be considered because that is an asset. That equipment is an asset, long-term, non-current asset, property, plant and equipment. So there it will be considered but not form part of inventory valuation. In case that equipment is not directly related to this manufacturing mean machinery. Okay. I was talking about blower, huh? So if you go through this हल्दीराम में, हल्दीराम के बॉक्सेस मिलते हैं आपके, जो कार्टन बॉक्सेस होते हैं जिसमें आपको स्वीट्स पैक होके दिए है ना, इन दैट स्वीट्स के ऊपर एक सेलोफिन लगती है, वो सेलोफिन का एक ब्लोअर होता है। मैं तो छोटा एग्जांपल दे रही हूँ आपको हल्दीराम का, नॉट ऑफ बिग मैन्युफैक्चरर्स में। तो वो सेलोफिन जो है आपका वो सेकेंडरी मटेरियल है, लेकिन जब आप ये बड़ी बड़ी फैक्ट्रीज में जाते हैं तो वो पैकिंग के लिए जो सेलोफिन्स होती हैं या जो पैकेट्स होते हैं उनकी लिए उनको क्या कहते हैं सील लॉक करने की, टू जस्ट सील लॉक वी यूज दैट ब्लोअर ऑल्सो। In case that blower is not available, or blower, whatever blower was there, it is not working, you can temporarily use something else also, some other heating material to block that. So in that case, ये आपका जो है, जो टेम्पररी है, आप किसी और चीज को यूज सब्स्टिट्यूट कर सकते हो, जैसे ही आपका ठीक हो जाएगा आप उसे हटा दोगे तो उसकी फाइनेंस कॉस्ट नहीं जुड़ रही होगी। हाउएवर, without sealing that packet, if you cannot make it as for ready for sale, and for that sealing, That equipment is the main integral part of the main machine, and without that, and that you cannot substitute with some other thing. आप किसी और तरीके से पैक नहीं कर सकते हो, तो आपको उस इक्विपमेंट को रिप्लेस करने के लिए नया इक्विपमेंट परचेज करना है। ब्लोअर, नया ब्लोअर परचेज करना है, और वो ब्लोअर आपने फाइनेंस कराया है, लोन लेके खरीदा है। इन दैट केस उसका जो इन्वेंट्री, जो फाइनेंस कॉस्ट होगा, बोरोइंग कॉस्ट होगा, दैट विल फॉर्म पार्ट ऑफ योर इन्वेंट्री। होप आई एम क्लियर? हाँ, ओके। दिस वाज द कन्वर्जन कॉस्ट वाला क्वेश्चन। I took a wrong question in front of you, na? Okay. Let's say a dealer has purchased 1,000 cars costing 2,80,000 each on deferred payment basis as 20,000 per month per car to be paid in 12 equal installments. Okay. So deferred payment was 25,000 into 12 per month per car to be paid in 12 equal installments. So this was the installment value. So it comes to your 25,000 into 12, 3 lakh rupees. Cash price of that particular car is 2,80,000. So what is the expense involved here? 20,000. So cost of inventory will be from the cash value only. And that finance cost which is there, it will be 1,000 cars का 2 lakhs ये value आ जाएगी आपकी. एंड कॉस्ट ऑफ गुड्स सोल्ड क्या होगी आपकी? कॉस्ट वैल्यू तो यही है 2,80,000. दिस फाइनेंस कॉस्ट विल नॉट बी फॉर्मिंग पार्ट ऑफ योर कॉस्ट ऑफ द एसेट. Okay, moving to this question, illustration 6 is homework for you. I believe you all will be able to do. Okay, again illustration 7 also, because this already we have explained ki selling and distribution costs are same thing, and both will be excluded. Okay, moving to next part of the measurement, allocating cost to joint products. Till now we were talking about the elements of cost of inventory: cost of purchase, cost of conversion, and other costs. Now we are talking about, suppose at the time of manufacture we use one raw material, but from out of that one raw material we were able to produce two or more products, and they have different nature. Both the products which have the output which was there, they have different nature, or sometimes we can say they have different value also. So how to deal with that, how to measure those? Okay, so when they have same nature, same relevance, same prominence, then it becomes joint product. Okay, for example, from coconut. From coconut, when we use, we extract coconut oil. That is your main product. At the same time, coconut के जो बुरादे होते हैं जो ना, तो जो flakes होते हैं, वो आपकी वो भी use होती हैं. That is also sellable. ठीक है, that is not wasted. So that is both are joint products, part and parcel of that manufacturing, है ना? We extract coconut oil. At that time, we have to just crush and we get buradas, what we can say that, and that is used. That is also sold. So that is joint product. At the same time, we have one byproduct also. That byproduct is what? The outer shell, that hard stone shell of that coconut, and that is in general waste. It is not used for anything. That is sold at scrap. Okay, or otherwise that resha type of that was there, that is used to manufacture your ropes and all ना, रस्सी बनाने के लिए काम आता है. So in that case, depending on कि whether in this that entity has installed proper manufacturing for those particular, all the usage, all the parts, usage of all the parts. If they are doing only for two main products, for extracting coconut oil, for extracting the coconut lashes, in that case they are joint products. How to account for that? What would be the measurement of both the products? Because one raw material was coconut. Out of that, we have produced two products. So what will be the value of product one? What will be the value of product two? Okay. Like petroleum products also. Yes, for petroleum products also. Simpler, I took an example of coconut because it would be easy to understand. Okay. Now, when they are joint products and when they are byproducts, we have to first see what will be the accounting. Okay. Where should I explain to you? Okay. When they are joint products, we have to first see at what point of time we are able to identify their separate value. If we are able to identify their separate value at the time they are separated, okay, कोकोनट को जब आपने मशीन में डाला, जैसे ही ऑयल निकला अलग से उसके वो फ्लेक्स निकले, तो आपको उसी समय अगर आप आइडेंटिफाई करें कि ऑयल की क्या वैल्यू होगी, गैसेस की अलग होगी, तो आप उस एट द पॉइंट ऑफ सेपरेशन जो स्प्लिट का टाइम है, उस समय सेपरेशन के टाइम पे अगर आइडेंटिफाई हो सकती है वैल्यू, तो आप दोनों की कॉस्ट वहां तक की, स्प्लिट होने के बाद आगे सारे इसके जो भी अदर कॉस्ट है या आपकी कॉस्ट ऑफ कन्वर्जन है आप उसमें ऐड कर लेंगे. However, sometimes it is not possible to identify the cost at the time of split, that separation. We were able to identify the cost only at the point of selling it. ठीक है. और कंप्लीशन, कंप्लीट होने के बाद ही हमें पता चल पा रहा है कि हाँ इसमें कॉस्ट इतनी लग रही है. ठीक है. या इतनी टोटल कॉस्ट लगी, अब हमको उसको स्प्लिट करना है, कॉस्ट को स्प्लिट करना है. रादर देन हमारा जब प्रोडक्ट स्प्लिट हुआ था तब हम कॉस्ट आइडेंटिफाई नहीं कर पाए, बट वी वर एबल टू कंप्यूट द टोटल कॉस्ट एंड दैट total cost has to be split into the two products. So there are two situations now, one at the point of split and at the time of completion. At the time of split जितना split हो गया था उसमें जो भी cost of conversion independently लगा है दोनों products के लिए, they will be added particularly to that. But when it is for, when you were not able to identify at the time of split, you were able to compute the total cost at the time of completion. Then how to allocate? At that time we'll be using it relative sales value. Relative sales value in total, not per unit. It will be in sales value, because not necessary कि आप एक कोकोनट से जो ऑयल निकला है उसकी क्वांटिटी और जो उसके वो निकले हैं रिमेनिंग रिमेन्स निकल रहे हैं जो कि आप पे सेलेबल है, वो उनकी क्वांटिटी और उनकी वैल्यू वेटेज सेम हो. ठीक है. यूनिट सेम हो. तो इन दैट केस विल बी कंप्यूटिंग दी टोटल रिलेटिव सेल्स वैल्यू पर का प्रोपोर्शन पे करेंगे. ठीक है. सो विल बी सीइंग. एक और चीज पहले हम समझ लेते हैं, देन विल गो विद दी एग्जाम्पल. बाय प्रोडक्ट्स. समटाइम्स आपका उसके साथ ऐसा एक प्रोडक्ट भी निकलता है जो उसका कोई खास यूज नहीं है, वो इममटीरियल है. सो दैट इममटीरियल इज सोल्ड एज स्क्रैप. तो जब स्क्रैप पे कोई चीज हम वैल्यू करेंगे तो इट विल ऑलवेज बी मेजर्ड एट नेट रिलाइजेबल वैल्यू. हम उसकी कॉस्ट नहीं निकालते, हम उसकी नेट रिलाइजेबल वैल्यू निकालते हैं कि कितने पे सेल हो जाएगा. उसको सेल करने के लिए हमें क्या एक्सपेंसेस और एस्टिमेटेड सेलिंग कॉस्ट व्हाट इज रिक्वायर्ड टू इंकर, वो हम एड ऑन करके उसे हम मतलब एनआरवी निकाल लेंगे और एनआरवी को हम रिड्यूस कर देंगे आउट ऑफ द मेन वैल्यू. सो बाय प्रोडक्ट में ऑल्सो बी ऑफ इक्वल इंपॉर्टेंस. समटाइम्स व्हेन बाय प्रोडक्ट्स आर ऑफ इक्वल इंपॉर्टेंस दे आर कंसिडर्ड एज जॉइंट प्रोडक्ट. और जॉइंट प्रोडक्ट की अकाउंटिंग करेंगे हम. जॉइंट प्रोडक्ट में दो तरह की अकाउंटिंग है. कब हमने आइडेंटिफाई किया, अगर एट द टाइम ऑफ स्प्लिट किया तो क्या होगा, और एट द टाइम ऑफ नहीं मतलब कंप्लीशन में हमें पता चल रहा है तो कैसे स्प्लिट करेंगे, बाइफोकेट करेंगे वैल्यू को. ठीक. एलोकेट करेंगे इनफैक्ट. ओके. Okay, so we'll be taking this example. In a manufacturing process of Mars Limited, one byproduct BP emerges besides two main products, MP1 and MP2, apart from scrap. तो scrap आपका क्या हो गया, ठीक है, या scrap आपकी अलग है, उसके अलावा भी आपका बाय प्रोडक्ट अगर आ रहा होगा तो बाय प्रोडक्ट में, सॉरी, let's check what is there. There are two joint products, MP1 and MP2. First of all, what is given is raw material, unit and amount, wages, fixed overhead and variable overhead. Okay. So we'll calculate all this. Is there any allocation for fixed overhead? Let me see. नहीं दिया हुआ है. So we'll sum total this value and we'll get 1,50,000 plus 90,000. I want answer from all of you students. Be active. Okay. 1,50,000 plus 90,000 plus 65,000 and 50,000. What is the cost? 3,55,000. Good. Now from this 3,55,000, we have to first find out the value of the byproduct. बिकॉज बाय प्रोडक्ट की एनआरवी जो होगी वो मेन वैल्यू कॉस्ट की वैल्यू में से रिड्यूस कर देंगे. वॉट एवर द रिमेन इज देयर, दैट रिमेनिंग अमाउंट विल बी बाइफर्केटेड बिटवीन जॉइंट प्रोडक्ट्स MP1 and MP2. So first we have to calculate the value of byproduct. What will be the value of byproduct? Average market price of MP1 is this. This is it. And byproduct is sold for 20 rupees per unit. And what was the unit quantity? Byproduct ki 2000 units. So 2000 into 20 rupees, we get 40,000. However, for net realizable value, do we take this directly 40,000 or we reduce something? एनआरवी की डेफिनेशन हमने पढ़ी थी. हाँ. एस्टिमेटेड सेलिंग प्राइस लेस एस्टिमेटेड selling expenses or estimated cost of completion. Both the things are deducted to arrive at NRV. So there's a profit of 5,000 on sale of byproduct, that is different thing. After incurring separate processing charges of 8,000 and packing charges of 2,000. So what we incurred, separate processing charge of 8,000 and separate processing charge of 2,000. For which? For byproduct. So byproduct का हमें कितना हमने एक्सपेंस किया? 10,000 हमने फर्दर एक्सपेंस किया था. This will be estimated selling price, estimated cost of completion. वैल्यू क्या आई आपकी? तो बाय वैल्यू ये क्या है आपकी? एनआरवी ऑफ बाय प्रोडक्ट. Okay, this is NRV of byproduct. Now this NRV of byproduct will be reduced, it will reduce what? It will reduce your main value. This is 3,55,000. So what will be the value now? 3,55,000 minus byproduct की value जो आपकी आई है NRV, byproduct की NRV that is 30,000 plus इसके अलावा आपको और भी कुछ लगा इसमें? There is a profit of 5,000 on sale of byproduct. तो ये profit भी आपकी इस value को ही reduce कर देगा. Hope it is clear. This 5,000 will also be reduced. तो आपकी cost to be allocated, not yet allocated, to be allocated to joint products will arrive at 3,20,000. Very good. 3,20,000. Now this 3,20,000 is to be further bifurcated into your मेन प्रोडक्ट्स. अब मेन प्रोडक्ट्स आपके क्या क्या थे 1 और 2 में? एक थे 5,000 यूनिट्स, आपकी क्वेश्चन में लिखिए 5,000 यूनिट्स. सेकेंड है 4,000 यूनिट्स. उनकी सेल वैल्यू क्या दी हुई है? 60 एंड 50. तो आप 60 से मल्टीप्लाई करिए, 50 से मल्टीप्लाई कीजिए. लेट मी गिव दिस आंसर टू मी. 60 में से समयनाथन, मनीष, रविंदर, ओके, आलिति, ओके, वेरी गुड. 3 लाख एंड 2 लाख. नाउ सेल्स वैल्यू आपकी एक सेम प्लेटफॉर्म में आ गई. नाउ आप इसका रेशियो निकालेंगे, दैट इज योर 3:2. ठीक है, इस 3:2 में आप इसको बाइफरकेट करोगे दिस 3,20,000 को. गॉट इट? हाँ, नॉट अंडरस्टैंड. अच्छा मनीष, लेस प्रॉफिट बाय प्रोडक्ट. ठीक है मनीष, आई डू वन थिंग, आई जस्ट ब्रिंग इट इन अ सेपरेट इसमें, मैं वहां पे आपको शो करती हूँ क्योंकि यहाँ कैलकुलेशन में थोड़ा सा मिक्स हो रहा है ना, आपको विजिबिलिटी भी नहीं आ रही होगी. ओके, लाइक आप अभी आगे पढ़ोगे, कोई चीज की कॉस्ट हमने मैन्युफैक्चर किया, अगर एट द टाइम ऑफ मैन्युफैक्चर मेरी कोई बाय प्रोडक्ट आया तो बाय प्रोडक्ट का नेट जो एनआरवी थी वो तो हमने रिड्यूस कर दी मेन कॉस्ट में से, पर हमको उस पर फायदा भी हो गया. उस स्क्रैप में बेचने पे मुझे स्क्रैप की वैल्यू भी मिली ना. जैसे आप जब फिक्स कॉस्ट करते हो, जब आप प्रॉपर्टी प्लांट एंड इक्विपमेंट है, प्रॉपर्टी प्लांट एंड इक्विपमेंट की आप डेप्रिशिएबल वैल्यू निकालते हो. आप एंटायर कॉस्ट को डेप्रिशिएबल वैल्यू नहीं मानते हो. आप उसकी डेप्रिशिएबल वैल्यू कैसे निकालते हो? आपकी कॉस्ट, योर कॉस्ट इज सेव 1,00,000, 10,000 इज द रेसिडुअल वैल्यू. तो 1,00,000 माइनस 10,000, 90,000 आपकी डेप्रिशिएबल वैल्यू मानी जाती है. क्यों? आप रेसिडुअल वैल्यू या फिर स्क्रैप वैल्यू, अदर टर्म इज स्क्रैप वैल्यू, आप उसे रिड्यूस करते हो. और जो 90,000 जो डेप्रिशिएबल वैल्यू है वही आप आगे यूज करते हो फॉर कैलकुलेशन ऑफ डेप्रिशिएशन और फॉर स्प्लिटिंग इनटू डेप्रिशिएशन ना, कि धीरे धीरे हम रिकॉग्नाइज करेंगे. इसी तरह से इन्वेंट्री में भी अगर आपका कोई बाय प्रोडक्ट आया तो बाय प्रोडक्ट के साथ उसको आपने सेल भी कर दिया, आपने उसको कॉस्ट, उसको निकालने में उस पर जो भी कॉस्ट थी, जो एनआरवी आपकी निकली, वो एनआरवी तो आप मेन कॉस्ट में से रिड्यूस कर रहे हैं, प्लस उसके साथ उसको बेच दी तो दिया आपने, बेचने से भी आपको फायदा आया. अल्टीमेटली वो मैन्युफैक्चरिंग का ही पार्ट है, आपकी उस मैन्युफैक्चरिंग में से ही वो बाय प्रोडक्ट निकला था, और वो बाय प्रोडक्ट की कॉस्ट को तो आपने अलग किया, प्लस आपने उसका प्रॉफिट भी अलग कर दिया, तो आपको एक्चुअल कॉस्ट मिल गई जिसको आप यूज करोगे एलोकेट करने के लिए. ठीक है, आ रही बात? हम स्क्रैप की वैल्यू निकालते हैं ना, स्क्रैप की वैल्यू क्या होती है हमेशा की? रियलाइजेबल वैल्यू. रियलाइजेबल वैल्यू क्या है? जितने में हमने सेल कर दिया. ठीक है मनीष, आर यू एबल टू अंडरस्टैंड नाउ? If byproduct is not sales, so only NRV can be reduced. Yes, yes. जब उसकी कोई स्क्रैप की कोई वैल्यू नहीं तो हम स्क्रैप की वैल्यू 0 मान लेंगे. अगर कोई स्क्रैप निकला हमारे साथ, जैसे बेसिकली यहाँ पे आप, स्क्रैप इज समथिंग डिफरेंट, इट इज नॉट बाय प्रोडक्ट. आप एक बार, मुझे लग रहा है शायद आप कंफ्यूज हो रहे हैं मनीष। वी आर नॉट टॉकिंग अबाउट स्क्रैप एज बाय प्रोडक्ट। हमारा यहाँ इस पूरे क्वेश्चन में वी हैव टू जॉइंट प्रोडक्ट्स, वन बाय प्रोडक्ट एंड वन स्क्रैप, जो कि हर मैन्युफैक्चरिंग में थोड़ा बहुत निकलता ही है। ठीक है, इसको एनआरवी लिया हमने, इसकी जो भी हमारी सेल वैल्यू है, अगर सेल वैल्यू है तो ठीक है, नहीं है तो इसकी वैल्यू नील हो जाती है, या फिर जो भी सेल वैल्यू होती है। ठीक है, उसके बाद हम टोटल कॉस्ट में से इसको माइनस कर देंगे, तभी हमारे पास जो है इसकी वैल्यू निकल आएगी, बैलेंसिंग फिगर। गॉट इट? है ना मनीष, क्लियर हो रहा है ना? आप मेरे ख्याल में स्क्रैप को बाय प्रोडक्ट मान रहे थे, इसलिए आपको थोड़ा समझ नहीं आ रहा था। स्क्रैप इज डिफरेंट, बाय प्रोडक्ट इज डिफरेंट। हमने बाय प्रोडक्ट को एनआरवी पे लिया है, हमने स्क्रैप की वैल्यू को माइनस किया है। स्क्रैप की वैल्यू हमें ऐसे नहीं पता चलती कॉस्ट क्या है, तो हम उसकी सेलिंग प्राइस को ही मान कर चलते हैं कि वो वैल्यू हमें रिड्यूस करनी है। ठीक, ओके। नाउ इन दिस क्वेश्चन अभी तक हमने क्या कर लिया था, 3,55,000 की टोटल कॉस्ट इंकर हुई थी, हमें एनआरवी मिल गई थी बाय प्रोडक्ट की। एनआरवी वो थी हमारी 30,000, 35,000, सॉरी 30,000 की। स्क्रैप का जो सेल वैल्यू थी वो हमें मिल गई 5,000 की। The cost which is to be allocated between two joint products is 3,20,000. Now this 3,20,000 is to be allocated between, वो हमने रेशियो निकाले था 3:2। 3:2 कैसे निकाला वो भी आपको होप यहाँ पे मैंने एक बार फिर से बता देती हूँ। MP1 and MP2. Okay, MP1 has 5,000 units, MP2 is having 4,000 units. They have a separate sale value also, 60 and 50. सो टोटल सेल्स वैल्यू, क्योंकि हमें रिलेटिव सेल्स वैल्यू लेना है, नॉट पर यूनिट लेनी है, तो रिलेटिव सेल्स वैल्यू हमारी आ गई 3 लाख एंड 2 लाख। So this 3 lakh and 2 lakh ratio becomes 3:2. This 3:2 is used for allocation of joint products value. So the 3,20,000 divided by, yes, 1,92,000 and 1,28,000 मेन प्रोडक्ट की वैल्यू आ गई। होप इट इज क्लियर। अब आप इसे पर यूनिट वैल्यू भी निकाल लीजिए, क्योंकि आपको इन्वेट, अभी हमने जो निकाला है कॉस्ट निकाली है फॉर द एंटायर यूनिट्स, उसमें से कितनी हमारी बची है, वी हैव टू सी दिस ऑल्सो। सो क्वेश्चन सेज देयर इज अ प्रॉफिट ऑफ दिस अंकल, हाँ हाँ हाँ, ओके। क्लोजिंग स्टॉक inventory at the time of reporting date was 250 of MP1 and 4,000 of MP2. So this 1,92,000 is the inventory value of 5,000 unit, and this 1,20,000 is the value of 4,000 unit. तो per value आ गई आपके पास, per value कितनी आई, 38.4 एंड 32। वेरी गुड। तो 38.4 को 250 से मल्टीप्लाई करेंगे, 32 जो MP2 क्या है उसकी 100 यूनिट से मल्टीप्लाई करेंगे, तो यू विल गेट द वैल्यू ऑफ इन्वेंट्री। यस, 9,600 एंड 3,200। ओके, hope this question is clear. We can move to the next, we can move to next question. Very good, Manish, Saminathan. But what is, students, I want everybody to be participative. Okay, Aleti is also participating. Good. Manish, Ravinder, everyone. Very good. I'm really happy that you all are participating. You are active and you are interactive to me as well. Na? So this is what I expect everybody. Then only, until unless you do it on your own, you won't be able to appreciate the concepts or calculations. Hope, okay, this is clear. Moving forward. Okay, this was the calculation which we have already done. We got 9,600 and 3,200. Okay. Now, till date, till this time, we have discussed the elements of cost. We have also discussed about allocation of cost to products when they are more than one product's output, huh? When the output is more than one product. Now we are talking about measurement techniques and cost formulas. See, student, this is simple allocation of cost, but sometimes you have recurring manufacturing is of recurring nature, or manufacturing is of non-recurring nature, that we can say is ordinarily interchangeable, not ordinarily interchangeable, and sometimes your specific identified manufacturing is there. or inventory is there. And all these different scenarios, your measurement technique will also be different. Okay. When in general, the measurement techniques which is provided is your standard cost method or retail method. Retail method क्या होता है, जैसे आप जो ट्रेडिंग करते हैं, बेसिकली दे डोंट डील इन मैन्युफैक्चरिंग, दे डील इन ट्रेडिंग ऑफ गुड्स. फॉर एग्जाम्पल, आप एक आपकी होम डेकोर की शॉप है. आप होम डेकोर में यू बाय योर वट एवर बेड शीट्स, पिलो कवर्स, मैट, सोफा कवर्स एंड ऑल. यू बाय इट एंड विथ some addition of margin you sell it. You buy it from a wholesaler and then you sell it to the customers. You are a retail shop. Okay. So in that situation, what happens? 5 item or 6 item you bought, when it sold you bought another six lot of 6 items. When it is sold, and again you bought another lot of 12 item or 6 item depending on the demand. So in that case, at the end of the year, it may happen that you have good number of purchasing, different purchasing of say 100 times you have purchased in different lots of six items का आपने बहुत बार purchase किया पूरे साल में. In that case, you won't be able to identify कि ये किसकी कॉस्ट आ रही है. तो वहां पे आपको कौन सी टेक्निक लगानी है. अगर आपने पर्टिकुलर यू हैव आइडेंटिफाई, यू हैव बॉट फर्स्ट कस्टमाइज आइटम आपने बाय किया था, तो उस पे आपने कौन सी कॉस्टिंग टेक्निक लगानी है. दिस इज व्हाट नाउ वी आर गोइंग टू डिस्कस. ओके. We were talking about retail market, where the items are recurring in nature and very fast moving items are there. In that case, what we identify is the gross profit margin ratio. Sales value reduced by that gross profit margin, whatever is what arrives is cost of goods sold. हम cost of goods sold के basis पे ही हम what we identify is the inventory value. ठीक है. We'll discuss how it is to be calculated. Then another is your standard cost method based on normal material, labor and capacity, जो कि हमने अभी देखा. और वो हम आइडेंटिफाई करते हैं और उसको हम एवरी रिपोर्टिंग डेट पे वी चेक कॉस्ट और एनआरवी विच एवर इज लेस. ठीक है. नाउ when goods are not ordinarily interchangeable, ordinarily interchangeable नहीं है, मीन्स जो आपने खरीदा वो अलग से आप आइडेंटिफाई करें कि इसकी क्या कॉस्ट है, और कोई दूसरा आइटम आपने परचेज किया. फॉर एग्जांपल, मैन्युफैक्चरर, कार डीलर, कार मैन्युफैक्चरर के पास सपोज करिए आपकी सुजुकी है, मारुति सुजुकी नेक्सस. दे manufacture Baleno also, they manufacture Grand Vitara also, they manufacture Ignis also, Bronx also. So in that case, they are not ordinarily interchangeable, they are separate item. ठीक है. विद इन देयर कैटेगरीज, बलिनो की अलग कैटेगरी है, आपकी ग्रैंड विटारा की अलग कैटेगरी है. इन दैट केस दे आर नॉट ऑर्डिनरी इंटरचेंजेबल. ठीक है. एरोप्लेन्स ऑल्सो, यस. सो इन दैट केस आप स्पेसिफिकली आइडेंटिफाई कर सकते हैं इसकी कॉस्ट क्या होगी, इसकी कॉस्ट क्या है, इसकी आइटम बाय आइटम आप कॉस्टिंग कर रहे हो. स्पेसिफिक आइडेंटिफिकेशन है. हर की कॉस्ट, मैन्युफैक्चरिंग कॉस्ट अलग होगी, आपने उस हिसाब से इन्वेंट्री की वैल्यू निकाल ली. बट जहां पे ऑर्डिनरी इंटरचेंजेबल नहीं है, फॉर एग्जाम्पल जैसे जो मैंने आपको बेडशीट और ये दी, आई फिर गई, आई गई, सेम हो सकता है, सेम टाइप ऑफ आपने बार बार मंगाई. ठीक है. और या फिर आपका जहां पे इतनी फास्ट मूविंग आइटम भी नहीं है, बट आपका नंबर ऑफ आइटम परचेज जो है वो रिकर कर रहा है. इन दैट केस आप वहां पे दो वेज यूज कर सकते हो, या फिर वेटेड एवरेज या फिर फर्स्ट एंड फर्स्ट. ये कब होता है? जहां पे आपके इंटरचेंजेबल, मतलब ऑर्डिनरी इंटरचेंजेबल है. फॉर एग्जाम्पल, आपका जैसे आप ऑयल खरीद रहे हैं, ऑयल का आपने ऑयल आता है, आपने ऑयल कंटेनर में डालते जाते हैं, उसी कंटेनर में दोबारा ऊपर से फिर और ऐड ऑन करते जाते हैं. जैसे ही वो बकेट खाली हो रहा है या कम हो रहा है, अगेन यू बाय इट एंड ऐड इट ऑन. सो यहाँ पे ऑर्डिनरी इंटरचेंजेबल है. आप मतलब ये चीज आपकी मिक्स हो रही है एक से ना, आप आइडेंटिफाई नहीं कर सकते इसमें कि जो पहले परचेज किया था 10 रुपीज के हिसाब पर लीटर के हिसाब से, वो वाला ऑयल नीचे है, जो 15 रुपीज पर लीटर के हिसाब से ऑयल परचेज किया था वो ऊपर है, क्योंकि वो ऑयल तो मिक्स हो गया. हाँ, तो दे आर ऑर्डिनरी इंटरचेंजेबल, मिक्स हो गए इसमें. तो इन दैट केस आप उस केस में आप क्या मेजरमेंट टेक्निक यूज करोगे? आप आइडेंटिफाई तो नहीं कर पा रहे, तो आप आइडेंटिफिकेशन की टेक्निक नहीं यूज कर सकते हैं. देन यू विल बी यूजिंग ईदर फर्स्ट इन फर्स्ट आउट ऑफ वेटेड एवरेज. पूरी जितनी भी क्वांटिटी बची है उसकी उस टोटल कॉस्ट से आप डिवाइड करके आप उसकी पर यूनिट वैल्यू निकाल के आप रिपोर्टिंग निकाल लीजिए. ठीक है. या फर्स्ट इन फर्स्ट आउट, जो पहले आया था आपने माना कि पहले वो बिका, यानी उस रेट पे पहले बिका हुआ है. ठीक है. फर्स्ट इन फर्स्ट आउट में whatever come first with whatever value it come first, we are believing that that has been sold out first. So in that case what happens? Inventory is the value of inventory remains with the latest purchase. जो लास्ट परचेज किया उस वैल्यू की से ही आपकी इन्वेंट्री की मेजरमेंट होगी, ठीक है। Okay. Now for weighted average, what we do is for weighted average, we take the units which are left out and the value of those units, we total that. For example, हमने let me come back to, okay, I am coming back to my question part. Okay. ठीक है. We are moving here, हाँ. आपकी इनिशियल इन्वेंट्री थी 100 यूनिट्स थी और उसकी एक्चुअल कॉस्ट 2.9 था, टोटल कॉस्ट 210 आ गई, ठीक है। आपने फिर सेल कर दिया 75, आपके पास 100 में से 75 गया, आपके पास कितनी यूनिट्स बची? 25, 150 ऐड हो गई, यहाँ पे आपकी 175 यूनिट्स हो गई। 100 यूनिट्स फिर से चली गई, तो अब आपके पास सिर्फ 75 बच रही है। 50 ऐड हो गई, 125 हो गई, ठीक है। तो आपकी 125 यूनिट्स आपकी इन्वेंट्री है, तो अब 125 अब किस में से आप मानोगे? इसमें से और इसमें से, है ना। ओके, इज इट क्लियर? 50 यूनिट्स इसमें से, क्योंकि फर्स्ट इन फर्स्ट आउट के हिसाब से ये 100 तो पूरी बिक गई आपकी। जो आपकी 125 बची है, 50 इसमें से बची है और रिमेनिंग 75 आप इसमें से मान के चलेंगे, ठीक है। तो फर्स्ट इन फर्स्ट आउट के हिसाब से ये जो वैल्यू है ये तो आपकी आउट हो गई। आप 50 का 3 रुपीज के साथ फीफो मेथड, इफ आई एम अप्लाइंग फीफो मेथड, then it will be 50 into 3 rupees and 75 into 2.8, okay। जो आपकी वैल्यू आएगी दैट विल बी योर कॉस्ट ऑफ इन्वेंट्री। 50 3s are 150 and 75 into 2.8, it comes to, student, I want an answer from you. 187.5. Why? This you are talking about what? Weighted average, students? 2.8 से वैल्यू क्या आ रही है? सॉरी, आई डिड 75 इन माय कैलकुलेशन एरर, सॉरी, it is 210. My mistake. 210 plus 150 comes to 360. Yes, this is the cost of inventory as per FIFO method. When we are talking about cost of inventory, मैंने आपको ये भी बताया कि first in first out में last जो cost है वो आपकी inventory होगी, तो cost of goods sold क्या होगा? I want cost of goods sold also. Cost of goods sold क्या होगा? ये 100 unit into 2.10 एंड इस 150 में से 75 यूनिट जो कि आपका बिक गया एट द रेट ऑफ 2.8, 210 and again 210, 420 will be your cost of goods sold, cost of goods sold, and this is inventory value. Okay, clear? This was case of FIFO method. Now when we come to weighted average method, what will be your accounting? Let me just delete it first. इसमें इरेजर नहीं आता धर्मेंद्र, यहाँ पीडीएफ में। चलो, we'll see here, we will try to do it here. Okay, we'll do it here. For weighted average method, you are aware that weighted average में आपके पास 300 175 गई थी, तो इसकी टोटल वैल्यू आपको आ गई, तो पर यूनिट वैल्यू आपकी चेंज हो जाएगी। वेटेड एवरेज में कॉस्ट आपका सेम रहेगा, 75 यूनिट्स कॉस्ट ऑफ गुड्स सोल्ड, 75 यूनिट्स ऑफ 2.1 एंड 100 यूनिट्स आपकी 175 के हिसाब से चल रही। वेटेड एवरेज में आप क्या कर रहे हैं? दो तरीके हैं, या फिर आप बिल्कुल सेपरेट ना करके पूरी 780 को डिवाइड कर दें आप 300 से, और फिर 175 के हिसाब से आप निकाल लीजिए। There are two ways of doing it, but because we are able to identify separate items, so we'll be separately doing it for every item. When we sold 75 unit, there was only one quantity. When we sold, इसको नहीं हम हटा सकते इरेजर से? Just a minute, huh? Let me just let me remove this ना, then I'll be able to explain you properly. एक बार just a minute, students. हाँ, नहीं, ये तो पीपीटी आ गई ना, ये नहीं लेना था। ना ना, हमने तो मेरी फाइल ही बदल दी। ये मेरी फाइल, ये इसे यहाँ से इरेजर हटाओ। इसमें से इरेजर हटा दो, मतलब ये इरेज करना है मुझे। ये तो पीपीटी आ गई ना मेरी, ये है। नहीं हो रहा, कोई बात नहीं, छोड़ो छोड़ो छोड़ो। तो नहीं हो रहा है, चलो ठीक है, कोई बात नहीं। So now students, we are talking about weighted average method. What is weighted average method? Weighted average में अच्छा, Manish has given 2.88. ये तो फैन हो सकता है, just a minute ना। Okay, this 75 units was sold out of this 100 units. मैं पेन दूसरा शायद अगर मेरे को लग जाए तो I'll take another pen. This will help at least, है ना? This 75 units, कोई बात नहीं, मैंने पेन is has been sold out of this 100 units at the rate of 2.1. ठीक है? So for weighted cost of goods sold जब हम निकालेंगे तो 75 units at the rate of 2.1 हमारा सेल हुआ। अब इसमें से आउट ऑफ दिस 100 यूनिट्स 25 इज स्टिल देयर। ओके, सो क्या हमारी वैल्यू आ जाएगी? 25 इंटू 2.1, वैल्यू मेरी क्या आ रही है? 52.5। and I bought another lot of 150 units at the rate of 2.8. So 150 into 2.8, my value comes to rupees 420. So 420 plus 52.5, it comes to 472.5 for this 175 remaining units at this point of time. At this point of time, ये मेरी weightage है. Now when I am selling that another lot of 100, तो मेरी इसकी वैल्यू क्या होगी? अब 1 से इसकी पर यूनिट वैल्यू हमारी आ गई हमारे पास 475, सॉरी 475 divided by 175, we got an average value of 2.71. Is it clear, students? Yeah, 2.7. Okay, so this comes to your 100 to 71. और यहाँ पे हमारी कितनी आई थी? 75 into 2.1, 157.5. So my cost of goods sold is now 428.5. ओके, इन्वेंट्री के लिए हमारी क्या वैल्यू होगी अब हमारी? दिस 175 में से हमने 100 कर दिया, हमारी पास वैल्यू कितनी बची थी हमारी? अब 75 यूनिट्स फ्रॉम दिस 2.8 प्लस 50 यूनिट जो हमने अनदर परचेज की ऑफ 3 रुपीज। आप मुझे इसकी कैलकुलेशंस बताइए प्लीज। 75 इंटू 2.8 कम्स टू 210 एंड 50 इंटू 3 कम्स टू 150. So average value मेरी कितनी आ जाएगी? 360 for this 125 units. Okay. So we get 360 divided by 125, per unit value we got is 2.88 inventory. Hope it is clear. Average cost और वेट उसके हिसाब से वहां पे भी आपकी 360 की वैल्यू आ रही है, पर यूनिट कॉस्ट आपकी दोनों की आइडेंटिफाइड है। यहाँ पे पर यूनिट कॉस्ट आपकी एवरेज आउट हो गई 2.88 में। Okay, is it clear, students? Can we move to next question? Okay, now it's already 10:13. I have still few small concepts yet to cover. So let me move to the next part. Hmm. What is specific identification method? Specific identification when in case when any customer or your client give you an order, firm order with specific identification, that we can say is customized order. In that customized order, to manufacture that customized products, you have to incur separate kind of cost, separate type of designing cost, separate type of manufacturing cost. So all the costs incurred for that customized goods will be capitalized in a separate manner. They won't be mixed up with the normal manufacturing. There'll be a separate manufacturing cost computed for those kind of specific identified units. Okay. So I'm moving towards not this theory. I'm trying this. We have already calculated FIFO and LIFO wala. And one more thing. One is now we come to the measurement of net realizable value. Right now, when we are talking about measurement techniques of that standard cost or retail method, or we can say FIFO method, weighted average method, specific identification method, they were all measurement techniques for cost of the inventory. They all were measurement techniques for cost of the inventory. Okay, now we are talking about measurement of net realizable value that we have already computed. Definition of net realizable value gives you how to compute net realizable value. Estimated selling price deducted with estimated selling cost with estimated cost of completion. We arrive at NRV. Now, how to deal with NRV? How to account for that NRV? One common measurement clause was lower of cost or NRV. When we are talking about lower of cost or NRV, so we calculated cost, we calculated NRV, whatever is low, we capitalize that value as an inventory on the reporting date. For example, your cost was say 5,000. Your cost was 5,000. Okay, your NRV comes to somewhere 4,500. Okay. Difference, we are going to measure our inventory at 4,500 because it is lower of cost to NRV. Okay, this is a now how to account for. How to account for means when you are measuring your inventory at 4,500, but you actually incurred 5,000. So what about that 500 difference? Where to take it out? We are taking it out that 5,000 की हमने इन्वेंट्री की वैल्यू हमने पहले 5,000 करी, पर अब हम उसको रिपोर्टिंग डेट पे 4,500 की एनआरवी पे मेजर कर रहे हैं, तो 500 जो हम एक कॉस्ट में से लेके जा रहे हैं वो कहाँ जाएगा? वो 500 हम कहाँ ले जाएंगे? एज अ राइट डाउन टू P&L, प्रॉफिट एंड लॉस अकाउंट पे. ठीक है, 5,000 इज वॉज द कॉस्ट विच यू इंकर्ड. आपकी अकाउंटिंग पूरी 5,000 से हुई होगी, जो भी आपने कैश आउट दिया होगा सब कुछ आपके 5,000 से आपकी टोटल वैल्यू आई होगी. नाउ ऑन रिपोर्टिंग डेट यू आर रीमेजरिंग, सब्सिक्वेंट मेजरमेंट कर रहे हैं आप इन्वेंट्री का, विच यू अराइव्ड की एनआरवी इज लेस देन कॉस्ट, सो यू मेजर्ड योर इन्वेंट्री एट एनआरवी. when you are measuring your inventory at NRV, so difference of cost and NRV goes to P&L as a loss on inventory. Okay. Now, there may be reversal also. In this reporting period, your NRV measurement, because your NRV was less than cost, you measured at 4,500. However, that inventory was unsold by next reporting date also. 2000 X1 के 2000 सपोज 25 चले, 2025 में आपने 4,500 की मेजरमेंट की ऑन 31st मार्च. वो इन्वेंट्री करंट एसेट है, इसका मतलब बिक जाएगी, बट समहाउ इट वाज नॉट सोल्ड. 2026 end, that is on March 31st March 2026, it was still with the entity. At that time you checked it out and you found कि yes, it can now be sold at, you again remeasure it, you again identify NRV. So NRV is date specific है ना, आपने हर समय पे अलग रिपोर्टिंग डेट पे अलग निकलेगी. आपकी इस डेट पे अभी 2025 की अभी हमने बात करी तो हमारी ये निकली. अब हमने 2026 में हमने जब मेजर किया, वी फाउंड इट 5,200 NRV. Now I want an answer whether we are going to reverse this 500 or we are going to reverse 4,500 जो हमने पहले मेजर करा था 700. हम किसको रिकॉग्नाइज करेंगे, जो 500 हम पहले पीएनएल में डाल चुके हैं, या फिर अभी 700 जो हमारी रीमेजरमेंट पे हमारी इन्वेंट्री की वैल्यू बढ़ गई? 500, yes, only 500 to the extent of cost. कॉस्ट और एनआरवी विच एवर इज लो, तो लोअर वैल्यू को लेते हैं, पर लेकिन जब हम उसको रिवर्स करेंगे, व्हेन वी आर रिवर्सिंग दैट लॉस ऑफ 500, वी विल बी रिवर्सिंग ओनली टू द एक्सटेंट विच वी हैव ऑलरेडी क्रेडिटेड टू पीएनएल, सॉरी डेबिटेड टू पीएनएल. हम उसके बियॉन्ड नहीं कर सकते, मतलब यानी 500 का नुकसान किया था और हमने अब फायदा दिखा दिया 700 का, दैट विल नॉट बी डन, है ना। एनआरवी में कॉस्ट तक ही जाना है, तो कॉस्ट तक जाने का मतलब है इस 4500 को हम कहाँ तक बढ़ा के लेकर आ सकते हैं, यहाँ, सॉरी, कहाँ तक ला सकते हैं, यहाँ तक ही, 5000 तक, ठीक है। तो हमें सिर्फ 500 विच वॉज चार्ज टू पीएनएल previous year, that will be reversed in the 2026, and your NRV will not reach to 5200. It will be cost, measurement of inventory will be now 5000. Okay, hope it is clear. सो दिस इज वन वे, व्हेन आइटम बाय हम कर रहे हैं तो एनआरवी की रिवर्सल कैसे करेंगे। नाउ वन कॉन्सेप्ट इज कि व्हेन वी हैव मेनी काइंड ऑफ आइटम्स, वी आर हैविंग item A also, item B also as an inventory. We have stock of varied items. So how to identify the value of each and every item of inventory? In that case, do we have to सम टोटल ग्रुप करके हम ग्रुप की एनआरवी निकालें, ग्रुप की कॉस्ट से कंपेयर करें, और एवरी आइटम की हमको एनआरवी निकालनी है और उसकी कॉस्ट से कंपेयर करना है। सो इन दैट केस स्टैंडर्ड सेज व्हेन देयर आर मोर देन वन आइटम, देन यू हैव टू आइडेंटिफाई एनआरवी आइटम बाय आइटम वन, ठीक है। आइटम बाय आइटम एनआरवी निकालेंगे, उसका कॉस्ट से कंपेयर करेंगे, लोअर ऑफ कॉस्ट एनआरवी विल बी कंसिडर्ड एज योर वैल्यू ऑफ इन्वेंट्री ऑन द रिपोर्टिंग डेट। However, when it is not possible, only when it is not possible कि आप आइटम बाय आइटम करते हैं, तब आपको एक ऑप्शन दिया कि यू मे डू इट ऑन ग्रुप बेसिस, ठीक है। होप आई एम क्लियर, प्लीज सी योर अवर मैसेज। ओके साइकरण, जस्ट अ मिनट बेटा, जस्ट अ मिनट, हाँ साइकरण, कैन यू पोस्ट योर मैसेज अगेन? Whether we can treat DMart supermarket, this is your query, okay, whether we can treat DMart supermarket sales through scanning of each item and thereby billing as specific identification method for determining closing. But in general, for such type of business na, we use retail method. We believe that we use that retail method वाला ना, gross profit margin, on that basis भी supermarkets के लिए in general जो है gross profit margin चलता है। आपके पास आइटम बाय आइटम आप निकाल रहे हैं, लेकिन आइटम बाय आइटम में इसकी आप वैल्यूएशन करने के लिए आपकी वो रिकरिंग नेचर की है, दैट फास्ट मूविंग आइटम्स है। सुपरमार्केट में आपने आज सोप्स खरीद आए आपके मार्केट में और आपके वो बिक गए, फिर आपने सोप्स खरीदे, सेम काइंड के सोप्स खरीद रहे हो बार बार ना, तो इन दैट केस वहां पे हम परसेंटेज रिटेल मेथड यूज करते हैं, नॉट इवन दैट एनआरबी। आइटम वाइज आइटम होगा, डेफिनेटली आइटम वाइज आइटम होगा, बट ग्रॉस प्रॉफिट मार्जिन बेसिस होगा, ठीक है, मार्जिन बेसिस पे चलेगा। So both will be used, combination of this and that, combination of your item by item plus your retail method. Okay. Okay. Here specific identification method can be used. It will be a cumbersome exercise because जहां आपकी क्वांटिटी ज्यादा होती है, जहां फास्ट मूविंग आइटम होता है, feasibility of using this method is, ऐसा नहीं है आप यू कैन नॉट यूज इट, बट वो कम्बरसम है और आपको वो अननेसेसरी एक्सरसाइज देगा। व्हेन यू हैव बीन गिवन अ चॉइस कि यू कैन यूज रिटेल मेथड, व्हाई नॉट टू गो फॉर दैट, दैट इज परमिसिबल ना। अननेसेसरी टू आप कम्बरसम करके कैलकुलेट, आपको अपनी अपना भी वर्किंग लूज रखना है ना, तो ऑलवेज टू गो फॉर समथिंग विच इज प्रोवाइडेड। और फिर रिटेल पर्पज के लिए उन्होंने कहा कि दिस मेथड टू बी यूज, तो आप उसे यूज करिए, मना ही नहीं है। सी देयर इज नो फॉर दैट यू कैन नॉट यूज इट, but which one is the best appropriate one, that is you have to identify. And in such situations where items are fast moving, recurring in nature, in that case always that retail method should be applied. That logically it appears to be like that, huh? Okay, hope Saikiran, I am clear. Okay, good. Okay, item by item basis I have already explained. When we have many kind of items, varied items, so we have to identify NRV of every item and then have to compare with the cost. Okay. 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 When to use NRV and what consideration to be made when we are identifying the net realizable value. For net realizable value, we have to identify the estimated selling price. We have to identify the estimated selling cost or estimated cost of completion. So first, to identify the estimated selling price. So it is very date specific. When on the date when you are identifying an NRV, you have to see the conditions which are prevailing at that time based on the conditions which was there on your reporting date. यानी कि एडजस्टिंग इवेंट्स आपको देखने हैं। कोई प्राइस फ्लक्चुएशन हो रहा है किसी पर्टिकुलर वैल्यू पे, और वो 31 मार्च में आपके पास वो एसेट थी और उसकी प्राइस फ्लक्चुएशन का कनेक्शन वहां पे दिख रहा था, तो आप एनआरवी में वो एस्टिमेटेड सेलिंग प्राइस प्राइस फ्लक्चुएशन के बेस पे निकालोगे। ठीक है। सो most reliable evidences estimates use the most reliable evidence available considering events after period end that confirms condition existing at period end. Means suppose you are identifying most reliable evidence on 15th April, on 15th April, ठीक है, you found on 15th April you found certain new outcomes which shows that कि 31st March की जिस डेट की आपको इन्वेंट्री वैल्यूएशन करनी है, 31st March 2026 में ये आपकी कंडीशंस प्रिवेल करी थी, confirms the condition existing on this particular date. तो आप यहाँ इस डेट पे जो भी सेलिंग प्राइस होगी उसको आप कंसिडर करेंगे एज एन एस्टिमेटेड सेलिंग प्राइस टू कैलकुलेट द एनआरवी फॉर द इन्वेंट्री विच यू आर होल्डिंग ऑन 31st March. ठीक है। So what I mean to say is that we can use adjusting events also. Consideration of adjusting event is permissible only when it confirms conditions existing at period end, that is on 31st March reporting date. Purpose of holding matters for firm sales contract, as we talked earlier also, for confirm orders, for specific orders or contracts we have entered with different selling price, their selling price is to be considered for that particular inventory. For other inventory you have to go for lower of cost or NRV, but for that particular inventory जो आपकी NRV है उसी बेसिस सेलिंग प्राइस के बेसिस पे ही आप उसकी वैल्यूएशन करेंगे, सेलिंग प्राइस माइनस एस्टिमेटेड कॉस्ट ऑफ सेलिंग एक्सपेंसेस एंड कंप्लीशन। ठीक है। वन मोर इज दैट टिल नाउ वी वर टॉकिंग अबाउट जहां पे हमारी आइटम की इन्वेंट्री, अब इन्वेंट्री में भी एज वी डिस्कस इंडिया टू डील्स विथ थ्री काइंड ऑफ इन्वेंट्रीज, raw material, work in progress and finished goods. When you are using raw material and converting it to finished goods, at that time you have to value the raw material also, you have to make the valuation of finished goods also, and also the valuation of work in progress. Work in progress में whatever cost you have incurred along with the cost of conversion till date, आप उसकी cost वो आपकी cost हो जाएगी। ठीक है। फिनिश गुड्स की वैल्यूएशन भी वट एवर कॉस्ट आपने इंकर करी थी टोटल कॉस्ट निकालेंगे, एनआरवी निकालेंगे, कॉस्ट और एनआरवी विच एवर इज लेस, दैट विल बी द वैल्यूएशन ऑफ इन्वेंट्री ऑफ फिनिश गुड्स। बट व्हेन इट कम्स टू वैल्यूएशन ऑफ रॉ मटेरियल, इट मे हैपन दैट रॉ मटेरियल की प्राइस फ्लक्चुएट कर रही है बट जो फाइनल आउटपुट आपका निकल के आएगा उसकी वैल्यूएशन में कोई इंपैक्ट नहीं आया, वो आपकी अबव कॉस्ट ही बिक रही है या आपको प्रॉफिट देगी ऑन सेल। इन दैट सिचुएशन हम रॉ मटेरियल को वी विल नॉट ब्रिंग इट डाउन टू एनआरवी। ठीक है। इन दैट सिचुएशन व्हेन योर फिनिश गुड्स in which that raw material is used, suppose you are using a finished good ABC, for manufacturing of ABC you used item A, raw material A, so you will not reduce the value of raw material A beyond the cost price if ABC is sold on profit, sold on profit. Okay, so in that situation what will be done, you will value the raw material A at cost. But there can be a vice versa situation also. Na? There can be a different situation where your ABC is not sold at cost or not sold at profit. It is sold at NRV, which is less than cost. At that situation, जब आपने फिनिश गुड्स की एनआरवी ही रिड्यूस कर दी तो आपको रॉ मटेरियल की वैल्यू भी रिड्यूस करनी पड़ेगी। इन दिस ऑब्वियस एनआरवी यूज करते हैं, पर रॉ मटेरियल के लिए बेस्ट एनआरवी क्या होती है, उसकी रिप्लेसमेंट कॉस्ट। रिप्लेसमेंट कॉस्ट आप उसको किस वैल्यू से रिप्लेस करो, कितनी मार्केट में रिप्लेस करके उस रॉ मटेरियल को बाय कर सकते हो, तो रिप्लेसमेंट कॉस्ट इज द एनआरवी ऑफ रॉ मटेरियल। रॉ स्पेलिंग काइंडली इग्नोर द स्पेलिंग, it is raw material. Okay, okay. So if you are in old situation, what I can say is that if finished goods more than cost sold at profit, finished goods sold at profit, raw material measured at cost. ठीक है। if finished goods sold at less than cost, huh? Raw material measured at replacement cost. Okay, okay, students, let's see an example also for this. This was not there. This is item by item, which we mentioned. 8,000, we have four kind of item, A1, A2, B1, C2, illustration 15. Cost is 8,000. NRV, I want NRV of every item. Just help me, students, to calculate the NRV of every item here. It is 7,300. Here it is 17,800. It is 16,800. And here it is 17,300, sorry, 7,350. So 8,000 cost to NRV, whichever is less, this is less. Cost to NRV, whichever is less, cost is less. 16,000 or 16,000, 16,000 is less. And then 6,000 or 7,350, 6,000 is. So we'll be measuring inventory A1 at 7,300. Inventory A2 at 14,000. Inventory B1 at 16,000. And inventory C1 at 6,000. It is clear, item by item, separate identification will be done for when we are able to identify the NRV of each item and cost of each item. Comparison will be lower of cost of NRV item by item. Okay. We can do group also, but it is only for your explanation we have mentioned, but it is not required. Okay, in the study material we have given the group, but not for it. Now, next illustration 16, what we were explaining right now, finished goods की valuation क्या होगी, raw material की valuation क्या होगी, ठीक है? Yeah, true. Okay. Moving to illustration 16, students. अच्छा, sorry, यहाँ से illustration 17 शुरू हो रहा है. We'll take it till here. Huh? Illustration 16. Opening inventory, finished goods 1,000, 2,500, 1,000 units है, आपके 2,500 की वैल्यू है. Raw material 1,100, 11,000 है. Okay. Purchases 10,000, आपकी वो है यूनिट्स है, और 1 लाख आपकी इसकी परचेज आपने करी है. लेबर 76,500. ओवरहेड, फिक्स ओवरहेड इज 75,000. Sale value of 10,000 units is 2,80,000. Closing inventory, we have raw material also of 900 and finished goods also of 1,200. The expected production for the year was 15,000 kg of the finished product. Due to fall in market demand, the sales price for the finished goods was 20 per kg and the replacement cost for the raw material was 9.5 per kg. Okay. Calculate the closing inventory on that date. Students, can I ask you to give me the answer or you want me to solve it? Tell me, you want me to solve it? I'll do that. Huh? First of all, we'll be calculating the cost of purchase. Cost of purchase will be calculated by C. We are having 10,000 units purchase. Opening inventory was 1,000. So we have to see how many units we have cost of goods sold. Yeah? So first of all, opening inventory plus purchases minus closing is equal to cost of goods sold. In units, we'll get 1,000 plus 10,000 minus 900. Sorry, minus 1,200. फिनिश गुड्स का हम देख रहे हैं ना अभी, ठीक है, माइनस 1,200. सो वी कम एट 11,000 माइनस गए तो हमारे पास 10,200 यूनिट्स हमने मैन्युफैक्चर करी हैं ड्यूरिंग द ईयर. 10,200 की विल बी कैलकुलेटिंग द कॉस्ट. सो कॉस्ट वी अराइव एट 10,000 यूनिट्स, 10,200 into 10,000 यूनिट्स फॉर 1 लाख, इट मीन्स एट द रेट ऑफ 10 रुपीज है. तो यहाँ पे हम 10 रुपीज के हिसाब से हमने कैलकुलेट किया, हमारी कितनी आ गई
मैम 9,800 units.
9,800 units. How come?
Yes, cost of goods 1,000 plus 10,000 minus 1,200 ना.
11,000 माइनस 1,000. अच्छा, 10,200. फिर हमने कुछ मिस किया क्या यहाँ पे? बिकॉज 10,200 विल बी, just a minute बेटा, you are right, I agree with that, something but I am missing it here na, because we are calculating cost of purchase of 200 na. 1,000 units were already there. You are right, it is 9,800. Agreed. But just a minute beta na, I have to see where we are going wrong then. The expected production for the year was 15,000 kg of the finished products that will be used for fixed overhead. Due to fall in the market demand, the sale price for the finished goods was 20 per kg and the replacement cost for the raw material was 9.5 per kg. Calculate the closing inventory. Cost of purchase 10,200 into 10. We have given in the study material in this manner. Na? So how it is coming at 10,200? It should be 98.
Ma'am, the purchase of 10,000 kg of units will be raw material, right? Not finished goods.
Ha, yes, yes, you are right. So it is 10,000 is the raw material. Agreed. So here we are having only 10,000 and there will be reducing. नहीं तो still बेटा it is not coming like that ना. हमारे पास finished goods भी तो हमें
No, but
add करने हैं ना.
opening raw material is 1100, na? And
हाँ,
closing inventory is 900.
अच्छा.
So then 10,200 is
10,000 plus 11. You mean to say 10,000 plus 100 minus है. ये यहाँ पे opening नहीं करना था. It should be
no.
1100 plus
Uh, uh,
10,000
yes,
minus 900 है ना.
yes.
हाँ. Now it will come as 10,200. Two. Thanks for correction, students. It is 10,000 of the raw material which we are going to use it for construction. Okay, sorry, for manufacturing. So cost of this 10,200 into 10 comes to 1,02,000 plus direct labor of 76,500. This is variable cost. It will be taken in entirety. So 76,500. Okay. Then your comes your fixed production overhead. Fixed production overhead, as it is mentioned, ki your expected production is 15,000. That is your normal capacity. Okay. So 15,000 is for your total 75,000 value. You are using 15,000. So what will be the cost for your, how much you have used it? 10,200. I want calculation, please, students.
51,000.
51,000. Okay. So we get the cost of inventory as 1,02,000 plus 76,500 plus 51,000. It comes to 2,29,500. Okay. Now divided by 10,200, we get per unit cost, which arrives at rupees 22.5. Okay. Is it okay till this point of time? Yes. Okay. So 22.5 is the cost of finished goods because after using all cost of conversion figure, we arrive at 22.5. However, in the question it is mentioned, due to fall in market demand, the sale price for the finished goods was 20 per kg. So NRV is 20 rupees. Okay. So we'll be measuring our finished goods at 20 rupees into 1200. Now, when your finished goods have been measured at NRV, so there's no place for raw material to be measured at cost. That has to be also written down. To what extent? To the extent of.
Madam, the 10,200 is raw material consumed, not cost of goods sold.
This I forgot to remove it. It is raw material consumed only. Agreed. We changed the calculation, but I forgot to delete CGS. Okay? Is it okay?
Yes, ma'am.
Now finished goods we are measuring at NRV. This was the cost. This is NRV. Finished goods are measured at NRV. So our raw material will also be measured at replacement cost. And replacement cost is mentioned as your 9.5. And what is your closing value? 900. So that will be your value of inventory. Hope it is clear, students?
Yes, ma'am.
Okay. Let's move back to PPT. Reversal, I have already explained you. Difference of NRV and cost is recognized in P&L. And when we are reversing it, we have to reverse it to the extent of cost only. We cannot increase the value beyond cost. Okay. Disclosure. This is the last point. Disclosure. when we are mentioning about inventories, we have to disclose the accounting policy, that is which measurement technique we are using it. Carrying amount analysis, that is total carrying amount and classification, whether merchandise, what is supplies, whether it is raw material, it is work in progress, it is finished goods, it is item A, item B, item C, whatever. We have to bifurcate. We have to give the analysis of all the inventory, well, total value of inventory which is appearing in the balance sheet. उसकी आपको क्लासिफिकेशन देनी है, डिस्क्लोज करनी है इन योर नोट्स टू अकाउंट्स, ठीक है. Then is fair value of the inventory. This is only given in the form of disclosure, not for your balance sheet purpose. It's only given in the form of disclosure. Carrying amount of inventory is carried at fair value less. Any inventory which you are showing in your balance sheet at fair value less cost to sell. Which inventory do we show at fair value as less cost to sell? We discussed at the beginning of the session. Which inventory do we disclose in our
Biological asset.
biological assets biological produce, very good. And also your commodity and trade market trade wala, that broker commodity wala, that also we show at fair value less cost to sell. Okay. Then any because of valuation of inventory at NRV, we have to write down some cost, then that is to be shown, that has been given to that has been routed to profit and loss account, and that is also disclosed here. Inventory expense written down and reversal of any write downs, whatever is there, that also we have to disclose it. Okay. Any inventory which we have pledged against any liability, that also has to be disclosed here. Okay. Differences, this is already given in the material. Students, I wanted to cover many questions also, which is given in your practice test your knowledge question and also in your practice questions part. I was not able to cover right now. You want me to cover something, I can take my open house session on Monday, coming Monday. If you agree, I can take it on those days. I'll give it on what you hope you all are there in the WhatsApp group. I'll just mention there in the WhatsApp group. These questions I'll be taking up in the open house session. And if you agree, then only I'll conduct that class. 4 to 5 Monday, evening 4 to 5. Just give me a thumbs up in case you want me to cover that. The BOS portal on mobile app recording lecture is not open. What to do? इधर एक स्टूडेंट कह रहे हैं कि मोबाइल ऐप पे खुल नहीं रहा रिकॉर्डेड लेक्चर्स. वैसे इट शुड नॉट बी डन बेटा. इन केस इट इज नॉट बीइंग ओपन, जस्ट आप एक बार इसको वो करके अनइंस्टॉल करके फिर से इंस्टॉल कर लीजिए बीओएस मोबाइल ऐप. आई होप दैट विल वर्क नाउ. ओके अलेती, यू आर नॉट इन व्हाट्सएप ग्रुप. लिंक दे रहे हैं. जस्ट अ मिनट, विल शेयर द व्हाट्सएप लिंक एंड यू ज्वाइन थ्रू व्हाट्सएप लिंक. जस्ट अ मिनट, गिव अस सम टाइम. वी आर शेयरिंग इट ऑन द चैट बॉक्स. Please give notes of this. I'll be sharing the PPT and along with that questions wala also, whatever calculations we have done. Otherwise, all the illustrations which we have discussed here, it is given in the material. So solution is also provided there, but I'll be sharing the PPT with you. Okay. Manish, Shashikant, but still not showing lectures. Acha, you do one thing, Manish. You are in the WhatsApp group, na? Beta, you are in the WhatsApp group. You just mention that in the WhatsApp group that you are not able to watch the recorded lectures on BOS mobile app. There, हम एक बार देख के we'll give it to the concerned team and we'll see what can be done. Na? You mentioned your this issue on your WhatsApp group also. From there, we'll escalate it to the concerned team. Okay. Aleti, just hold down now. Before winding up the session, we want to give the link of that chat group. What is WhatsApp number? We'll be sharing the link, beta, and you have to join through that WhatsApp link. Just a minute, huh? We are sharing that. उनके पास नहीं है, साकेत के पास. By that time, students, you stay here, but we can wind up the session. Live webcast जो है वो बंद करवा देते हैं. संकेत जी, हाँ, आप लाइव वेबकास्ट बंद कर दीजिए. अब इसका हम यहाँ पे स्टूडेंट्स यू स्टे हियर. हाँ, अच्छा, यू हैवंट टेल मी, यू वांट मी टू डिस्कस द क्वेश्चन.